Not still pretty amateur at streaming, so not sure if this is working. Hello, can you hear me? Hello, Yasuo, Francis, Miss Dexia. Yo, what's good, my guys? How's it going? What's up, Jens? Yeah, this will be recorded, don't worry. I'm not sure how long I'll stream for, but we'll probably be doing at least Equity Open together, which is at 9:30, so that's... Oh my god, it's still 2.5 hours away. Yep, I guess we'll be streaming for that long. Somewhere around then. How's it going, guys? Hope you're all doing well. I'm not sure if I should make an announcement on the Discord, because last time I didn't do any sort of announcement, and we had plenty of questions. Too many questions, in fact. So if I make an announcement, I think there's no way I'll be able to keep up with everyone. What's up, Jan? David? Hello, Ras? Mohammed? What's up, Omai? How's the music sound in the background, the volume? Is it too loud or too soft? What do you think? Or what about my microphone? Voice is clear. Excellent. What's up, Will? Hello. Hello, man. Not hearing background music. Let me boost that up. What about now? Okay, it's probably a bit loud. Cannot hear any music? Okay, let me make it a little bit softer. Like that. That sounds okay, maybe. If you're wondering what we're listening to, it's just this one, the classic lo-fi hip-hop. Cool, excellent. Let me head on to my YouTube real quick. Make sure I use YouTube copyright. I think it's copyright free. Should be. Hello, TCAS. What's up, Abby, Abraham? Hello, Triple D, DDD. But yeah, I was gonna say this community post from last week. 50% of you guys wanted Monday, and then the other 50% of you guys were pretty split. But today on Monday, the news that we've got some orange folder news. And every single other day has red impact news. So I was thinking, if we had a stream during a red impact news day, that would be so much more exciting. Because those are the times when more volatility is injected into the market, and we know that when there's more volatility, we're more likely to reach key areas in price. So here on Monday, it's a pretty lackluster day news-wise, so we can't really have too high of expectations. Mohammed says, my strategies are worth trying. Please advise these strategies also work on crypto. I don't trade crypto, Mohammed, but in the community Discord, we have a crypto section, and by the looks of it, they seem to be finding pretty clean setups with this strategy as well. So test it out yourself and see what you find. You see a lot of RMRs, but not all work. I guess the problem is understanding when the real liquidity hunt takes place. Any tips for understanding when the liquidity hunt takes place? Yeah, this is a great question because this shows that you've already developed the skill of finding the RMR, which is the first step, so you can see it form everywhere. Like if I zoom out to somewhere random, we'll most likely be able to find some random RMR. So here is a ray, here's a shift, in here is a gap for a return, here's our return area, stop loss bottom of the low, and objectives above. And throughout the day we would have been able to, oh, where are we? And throughout the day we probably would have been able to take a partial here, maybe stop loss break even, get stopped at the end of the day, or hold on to the end. So this was just an example of just a really random RMR example. But I want to find a failed one. Raid, shift. That one works as well. Raid, shift, return. Raid, shift, return. Let me find a failed one. Like this one here. Raid, a shift, and a return within here. And if you play stay short, aiming for this low, eventually you would have been stopped. But I think the whole point I was trying to get to is there are a lot of factors that can help you determine whether the RMR is going to be a more likely setup or a higher probability setup. The first one that I mentioned just before was time. Time is one of the biggest factors in price and one of the biggest reasons that can help you determine when price reaches certain areas, which is why we like to trade during sessions. Like we could trade 24/7. This market's 24/7 and doesn't stop until the weekend. But why don't we decide to trade in the PM session all the way to the end of Asian session? It's because generally, not all the time, but generally these times are pretty lackluster. There's less volatility and it's less likely to reach a key area. So just by trading within a session, the probabilities of our setup increase, but then you can narrow into the sessions. So if we just trade New York session, you can narrow into 9:30, the equity open, or you can narrow into specific news times. Should probably my chart. It's pretty messy. Some other things, Abby, that you can look at to help improve the probabilities of the setups is using correlated markets. That's probably one of the biggest ones that I use. For example, if you have a long setup on the NASDAQ, if on the most closely correlated pairs, the S&P and the Dow, they're not showing similar tendencies to want to be bullish, then it's going to be a less likely setup. And we know that pairs that correlate with NASDAQ can be any of the USD pairs. So if Euro USD and Pound USD have really clean objectives above, and NASDAQ also has clean objectives above, then that is a good sign. Corey, I didn't even think about the news when I voted. Oh, good, Corey. Thiv says buys on gold. What do you see, Thiv? Buys on gold? What is he aiming for? Let's think. If Thiv wants to buy on gold, what is his objective? Is he aiming for these relative equal highs? What is this high? Is this a daily high? Kind of, not really. Gold, higher time frame, I'm leaning towards bearishness. Because above, we just have some regular swing highs. If this would be the most optimistic up here. Yeah, I'm leaning towards bearishness. Too much clean areas of liquidity underneath. Jan says, am I trading live or only paper? I trade live, Jan. On TradingView, I trade with paper. Abby says, what time sessions do I trade every day? Of course I don't trade every day, but I look at the charts every day during London and New York session. I live in Australia, so whenever it's the morning in the US, it's nighttime over here. So I can be on the charts or just on the computer from dinner time until sleep time. So that kind of covers from the start of London to the end of New York Open. Mozzie, yes, I'm from Australia. Talk about correlating markets. This is a pretty big topic. Canada, do you want to pick one market that you trade with? And then I'll talk about correlating markets with that specific market. I'll pick like one or two that relate to yours. Otherwise, it's a huge topic. I don't know where to start. Corey, I've studied a lot of my videos and they've helped you tremendously. Now your issue is trying to make sure the direction is right. Yep, this seems to be the most common thing that you run into once you start to find the RMR. But once again, that's with practice, you develop bias, and with bias, where does it come from? Or how do you develop a bias? For me, my bias is all developed in the framework of how things trade. So for example, in a week, we know that if a week wants to go from A to B, a likely framework isn't just to go like this. The whole framework is likely to be something like that. So if you have something in mind like this, then this might be a Tuesday or a Wednesday. That can increase your selectivity already. And then is there news throughout the week? Maybe there is news on Wednesday. So then you can narrow in. And if Monday, Tuesday you have some bullishness and you had, let's say, some lower time frame objectives here and they were just taken, now you're even more zoomed in. And now you can look for these bearish RMR patterns inside Wednesday at a specific news time. So from an outside perspective, we kind of zoom it in, and once we're more zoomed in, we can look for more selective setups. But there are heaps of factors that can help you find higher probability things. You're from Sunny Coast? Currently New York Equity Open is 12:30. Yeah, daylight saving time, it kind of pushed everything further by 1 hour for us down here. Gotta do what you gotta do. Otherwise, we're gonna have to end up trading the Asian session. Oh man, I don't want to be trading the Asian session. Look at this. Asian session, New York, London. Asian session, New York, London. Not only is there less movement, but typically spreads on brokers are absolutely ridiculous. On some, not all of them. So you'll probably be limited to shorter time frame scalping, to lower time frame objectives, instead of aiming for key objectives during kill zone hours. Canada, US 30, S&P and NAS. Oh yeah, with correlating markets, you can always just start with those three, because they are meant to be closely correlated, so they're all meant to be doing the same thing. And a type of correlation, I talk about it in every video, is relative strength. It's one of the easiest ways to use, easiest ways to be more selective in your trade, to pick the more likely trade. Like for example, if I wanted to do a relative strength analysis right now, right this second, let's say we had an RMR pattern, it was very clean, and our entry is right now at 719. Which one would I pick? If I long, let's do if I long first. So if I long, I'm going to zoom into the 1 minute, just have a quick look. Okay. Oh, US 30, S&P, NAS. Okay, I'm longing the NAS. So if I long, I'm longing the NAS. The way I did it is, this one is very easy to eyeball because there's a big difference. But when there's not a big difference, it doesn't matter as much. Just for an experiment, I'm going to place a long on all of these, just a reference point so you can see what the difference will be on the top of that candle. But on NASDAQ, price made a higher high, right? On S&P, price made a slightly higher high, right? So it's a bit weaker than the NASDAQ. And on the S&P, price made a lower high. So this one's very obvious to see that NASDAQ is strongest, S&P is in the middle, and Dow is the weakest. So this is a very, I would say easy, if you just keep practicing it. It's not a difficult step. But yeah, this is how you do a relative strength analysis. If you don't have the luxury to do a relative strength analysis at that moment in time, you can always zoom out and do a slightly higher time frame relative strength analysis. So if I look through very quickly, okay, once again, NAS is strongest. So I'm just looking at these lows here. NASDAQ made a higher low and a higher low. S&P made a higher low and a lower low. And over here on the Dow made a higher low and a lower low, right? So it's pretty obvious to see if you know what you're looking at, but NASDAQ is the strongest. So if I wanted to long, I'd long the NASDAQ. And if I wanted to short, yeah, I'd short the Dow. Because Dow lower high, S&P higher high. So at this moment in time, this is the relative strength leaderboard, whatever you want to call it. But we know that relative strength changes, it adapts. So that doesn't mean that the Dow is going to be the weakest for the entire day. That's very unlikely actually. And it doesn't mean the NASDAQ is going to stay the strongest. It just means at this time, that's what it is. All right, let's move on to the next question. Oh my god, I'm pushing a button on my mouse, the side button that unlocks my microphone. And now my thumb is getting sore. Francis, our dad ICT must be proud. Love from Qatar. AB says, if I identify an RMR in NASDAQ, does the S&P or Dow also show it simultaneously, or those just need to show a structure shift to the direction of your bias? Because of relative strength, they won't always show the same. They won't always paint the same picture, but just because they're not painting the same picture of that lower time frame RMR setup, it doesn't mean that they all have key objectives above. So like the key objectives above that formed the bias, that's always going to be there, and whatever's happening in that lower time frame is not too relevant to what's above. Got the message that I wanted to get across. Because chances are, if let's say on the Dow, let's just say this is an RMR pattern and it retraces here, because Dow is the weakest, on the NASDAQ, the strongest, we would not expect this to happen. We'd more likely expect something like that to happen, like a much shallower retracement. So if the RMR happens on one market, it doesn't have to paint the exact RMR on the others. If it does, then it just means that the relative strength is quite similar. And if they're similar, it doesn't matter which one you pick. Just pick any of them. Hope that answers you. Ezekiel. What's up, Ezekiel? What do I think about the Aussie is a potential buy around 0.66950? I don't know. Let's have a look. What are you aiming for? That's the first question that comes to my mind. What do we have above? We have a few sets of equal highs. They're a bit far, but they're still there. And it is a Monday, keep in mind. And Monday, no news today. What price did you say? 66950. That. Over here, in that gap. This is my first instinct. My first instinct is you see a and the raid reaches a key area. This is likely a higher time frame fair value gap. You can't see it in here, but when I'll just move on to the 30-minute chart. When those candles extend over a period of time, it creates this gap. So it's raided and it's reached. I gotta sneeze. Oh, okay. Maybe I should have. I was gonna say maybe I should have let you hear my sneeze. Probably not. That would be very unprofessional. And okay. So as I was saying, you have a raid, a reach, short-term market structure shift. So it's an okay market structure shift, not an A+ market structure shift. An A+ one would be one that breaks whatever created the raid. So this would be the area that created this raid. So if price had a very decisive bullish shift above that high and left gaps underneath, this would be like an A+ RMR setup, as long as you have clean objectives above. But what you see, we have, let me zoom out a bit more, 15-minute gap in here. What time is it? It's 7:15. Do we have news on Aussie. I don't really check Aussie stuff. You have to keep in mind news stuff. Monday, no AUD. The only news for Sunday. Sunday and Thursday. Sunday, that was this. Thursday is later. It looks okay. Honestly, it looks okay. The only thing stopping me is I don't have as clean objectives as I'd like. And it's a Monday. That's probably the biggest thing. Just the start of the week. We have short-term equal highs, and I know that on correlating markets, if we're looking to be bullish, oh Jesus, indices have a few objectives above, EU, GU have objectives above. So yeah, it's an okay idea. I like it. Measure your stop if you place a trade. What would your stop be? Below this swing, below that swing. Let's pick this one, 16 pips. All right. So if price retraces, you could set a limit, set a market, set an alert, 16 pip stop loss. I'll show you what I do on my calculator actually. I'll just copy and paste it into this chart. So what was 16 pips? Yeah. So if you're doing one of those challenges or whatever, put in your equity, let's say 100k, risk whatever you like, let's say 1% on AUD USD, 16 pip stop, your lot size is 6.25. So if I placed a limit or whatever here, you'd place 6.25, whatever you can. And that just means at a 16 point stop loss, you're going to be risking 1%. And your objectives, you could aim for this as a partial, aim for a short-term partial, but this is a decent risk to reward. All right, next question. Raz, markets like S&P, NAS, and Dow, please hit more about correlation in those markets. I'll probably end up talking about this anyway, because I love to talk about relative strength, correlating with, I think that's just because a lot of what I do. Just correlating markets is such a big thing with my trading. It's one of the biggest ways that I've improved my, how do I say this? It's the biggest thing that helped me improve the selectivity of my trades. Because I used to just see a setup form on one market. If it looks very clean, then I take it. But now we have that must go to step, that relative strength step. So that's a very quick way to do that correlation, do a correlating analysis. But then we can also use Forex pairs, we can use metals, and we can also use the DXY and the VIX. Fun fact, VIX is in a very, cannot stress enough, very key area. So hint, hint, nudge, nudge. If you don't use VIX to trade the indices, this would be an interesting market to include in your analysis. Long story short, it's an inverse to the indices. So if VIX has a tendency to go down, indices will have a tendency to go up. Okay. How long have I been trading the RMR pattern? I've been trading the RMR pattern pretty much my instinct was to say my entire life, but that's a lie. because when I first started, it was pretty much with ICT, and his teachings. When you combine some things together, you don't even realize it, but it is the RMR itself. Because if you just think of one thing, let's just say an order block, right? Let's just trade with order block. If I pick somewhere random with an order block, right? Like let's just pick, I'm just gonna zoom somewhere random right here, okay? Let's pick an order block that was respected, this one, okay? This order block, we can see that it's respected, right? Price retraced into the order block and dumped. But you don't realize that a lot of the times the RMR is in this. Like you can see that there was a raid, buy side liquidity, a shift, a good shift that takes out whatever created the raid, a market structure shift, a return within a gap, a return within an order block, and a return within a very deep premium price. And then as it returns, you have that bullish move. So sometimes you don't even realize that you're trading the RMR, but it's there. And when I first started to use the RMR, that's not what I called it. There were many names before the RMR existed that I named different things. But I settled on RMR eventually because it just seemed very logical to me. One of the, wait, let me find a screenshot in my journal. It's probably like a couple years old screenshot, and I think I must have wrote in the screenshot what I called the RMR. Let me find it. It's a pretty funny, okay, it's not that funny, but I think it's a funny name. What is this screenshot? This is oh my god, what is this screenshot? This is so old. I'm leaking myself here. When was this taken? This was taken November 13th of 2020. Oh my god. This is just a random screenshot in my journal. Did I write what did I say? RTO return to origin. I forgot about that. So I used to call, wait, what is this screenshot? Clean lows looking to break. Okay, so that would be the raid in our current understanding. What else did I have? Miss short on breaker, was asleep. Retracement could enter short. Okay, so clean lows, we have that raid. We have that short-term market structure shift, breaking some swing highs. And then we have a return area. You see this gap right here? This is a 60-minute chart. So we have a 1 hour gap right in here. Do you see it? Right on that 70% line. So if I drew a gap there, which is what I do currently, then you can see that price retraces into that specific area before pumping. What did I look at? What is my RTO? I don't know what the hell I think I was only using a fib. I think my return method was just 62%, 70% in a discount. I don't think I knew, or how, I must have knew what a gap was. I just don't think I used a gap or an order block for this. I just used a fib. So yeah. And prediction, bear, Friday, so might settle. Great notes, Andy. Friday, so might settle. Good idea. Friday is generally, you know how I drew that candle? Monday, Tuesday manipulation, Wednesday, Thursday expansion, end of Friday bit of consolidation. Back then, Friday on a Forex pair used to consolidate, a very high likely chance of just ranging price action. So that's why I decided it might be a good idea to settle instead of looking for a trade. Anyways, when is this? November 13, 2020. Let me go back. November 13th. Can I even go back that far? November 3rd. I can. Maybe a 2-hour chart. Sorry guys, I'm not keeping up with chat, but I'm getting interested in my previous journaling history. November 13th. November 13th. Oh, it was a Friday. Oh, it was the start of Friday. Okay, at the end of Thursday, I said Friday might settle. Okay, so there was the bullish trade on the 12th over here. So this was that RMR trade. That was 2 years ago. Let's have a look at this trade if we were to backtest it with the knowledge that we have now. Okay, so we have a raid and we also have a reach. So it raids sell side liquidity and reaches a key area. So this is an A+ raid so far. We have a short-term market structure shift that we saw in there. So it's not a good market structure shift. We have a return and then we have bullish movement. And if we were looking for objectives, what was I looking at? I think my final objective would have just been this gap over here. So my final objective would have been right there. And in hindsight, if we held on to further objectives, we would have... This is unrealistic. We're day traders here. We're not swing traders, so we can't look at moves like this and think we could have taken part of this. We're day traders here. We take trades that last a few hours. Okay. Anyways, that was pretty fun. The whole point of me finding this old screenshot was to tell you what I used to name the RMR. Like, you can see that I've been using the RMR forever, but it's just never been called the RMR, right? This was called the RTO. It was the raid, shift, and a return to origin. Return to the origin of price that created that market structure shift. But another, let me find it. What is this? This is what I called it. This is what I used to call it, right here. So we have that short-term raid that reaches a gap on the left. We have that market structure shift breaking a swing high, and we have that return, and I'm highlighting a breaker at the moment, but you could have highlighted the order block, or you could have highlighted this gap in here. So this is an RMR as well, but you can see the name I used is not RMR and it's not RTO. It's bullish UP1. That's what I used to call it. I used to call it the UP1. And I had so many patterns. I had a UP1, I had UP2, I had UP3. But in the end, UP1 became the RMR. It stands for Universal Pattern Number 1. My number one universal pattern. Because I started to notice this phenomenon, not only in Euro USD, but in other Forex pairs. Because I only traded Forex back then. I didn't trade indices. But now that I've traded with indices for the past year, or past years, it really hits home the name that it's a universal pattern. So that's the origin of the RMR. It was RTO, and then it was UP1, and now it's the RMR. Hope you guys enjoyed that little history lesson on the development of my strategy. Okay, Euro USD, what are you doing? Oh my god. Alright, back to the chat. Yes. Oh god, so many questions. It was a good idea not to make an announcement, otherwise there'd be way too many questions and I'd just get upset that I couldn't answer you all. How to get that calculator? 808 slime. There's a video on my YouTube. If you just type in AZ Trading Risk Calculator, it'll pop up. Accidental. What's up, Accidental? No, you're not late. I started maybe half an hour ago, but we're going to be streaming past the Equity Open because I wanted to watch Equity Open live. Because other than that, if we're just watching price like in some random time, it's kind of boring. And we did like a live relative strength analysis really quickly, where we saw that the Nasdaq was the strongest. And so this is just a little update. It's not a trade here, just an example of relative strength. But this would have been, so Nasdaq would have retraced back to break even at the moment. S&P, if we're just predicting, S&P was weaker at the time, if you remember. So S&P should not have retraced back to break even, and Dow should be much lower than break even. Here in S&P, okay, we've reached around break even, and Dow, we've also reached around break even. So not the best example, but typically that's what we'd expect if there was a big difference in relative strength. Okay, next question. Helio Group, help us with my Forex calculator. I don't know if I want to do that now. I've made a video on it. I think if you watch the video and you still find it difficult to understand, then let me know and I'll talk about it. What's up, Sanjay? SOT and BTB. What is SOT and BTB? Details how to market watching trade entry, tell me brother. Oh my god, Sanjay. I'm gonna need you to be a bit more specific. What do I use to journal, says TCAS? I use Discord, just a private Discord server. Hello Goodwill, my G sure likes to laugh. I suppose I do. So, it's not a bad thing, right? I don't mind laughing. I think I just laugh at myself, to be honest. Tio, how do I start to analyze the indices? And how do I make the probable daily bias? How do I start to analyze it? Always just a liquidity analysis. So if I have a look at price, depending on what time frame you are, so if you're a scalper, I'd probably stick to like a 1 minute chart and see this is where price is now, what is above price, what is below price. Let's say these equal highs are above price, this swing low is below price, and as a scalper, let's say that this area is more likely in my eyes. So if your entry method is a discount or whatnot, if I see a retracement to around this area, that's where I'm going to look for a buy. With my stop loss there, my take profit here, and this is like a scalp. And then depending on the time frame or the type of trader you are, you're just going to go higher and higher time frame. So scalpers, that's all they're looking for. They're probably in and out within a couple seconds or minutes. It's not my style, but it's probably what they'd be doing. If you're like a day trader, maybe like a 5-15 minute time frame just to find something clean. These are just regular swings, nothing too interesting about it. So we want to find interesting things. So we've got to zoom out a bit, see if there's anything really that catches our eye. And the one thing that catches my eye are these fat equal lows. I don't know why I call it fat. I think I've never changed. I think I used to call it fat like 3 years ago. But whenever I see something that's really clean, I either call it fat or stupid. Either stupid clean equal lows or fat equal lows. But yeah, and then yeah, if it's a Monday and you really think it's gonna go there on a Monday, that's your bias. That's it. And then when you're zoomed in, you're only going to be looking for short setups. So for example, this and a short-term shift, or you wait for a higher time frame shift. If price retraces, you're not going to be looking for this buy because your bias is bullish. Instead, you're going to be looking for things like a raid here, a shift, and then a return in this area, and you're going to be looking for a short. And then if this short happens before news or before 9:30, then you're going to have to accept the risk, accept that it's likely to be less probability. But if it happens after news and after 9:30, and let's say price is over here at 9:30, and that was my phone, and price retraces here after 9:30, then that could be a slightly higher probability. Okay, I think the music is a bit loud. Is it a bit loud? It's kind of loud in my ears. Maybe I just gotta turn it down on my end. How do I start? Oh yeah, I answered that one. Abby. Is it Abby or Abby? Abraham. Do I trade full-time or kept a job or business as a safety net? I trade full-time, Abby. However, we did, listen here, this stream was based on our YouTube milestone, reaching partnership. So now, I could say that I think I cut out. I was gonna say, our YouTube now is another source of income, but it's it's irrelevant. Tom, fellow Aussie, still keeps up at midnight to stream. Keeps you up at midnight? Oh. Don't stay up too late, Tom, if you have to wake up early. My daily schedule is, if I don't have anything to do the next day, and it's a weekday, I'll end up sleeping maybe 3 o'clock, 4 o'clock in the morning, and I'll wake up at like 12 or 1. Oh, still a lot of sleep, but just got nothing to do during the day, so might as well. Mumble. Hello, what I don't understand, when do you know if it's a raid or not? It can also fall further, for example. Of course. So all a raid is when a price leg takes liquidity, right? So when price takes any swing, it's a raid. This could be a swing, raid, this could be a raid, but for the RMR to happen, you need multiple steps. We need a shift afterwards. So if it raids down here and it keeps going and it keeps going, there's no shift. And if there's no shift, there's no trade. So we haven't lost or anything. It's only until a shift happens, then we can start to look for the next step. Because of course price can keep dumping, just keep raiding, but our pattern is the RMR pattern. It's not just the R and then FOMO in pattern. We have a few steps. How to know buy or sell RMR to search? That's a pretty broad question. Just be selective using correlating markets, find very clean setups, find good objectives, find clean objectives. Yeah, that's how you do it. And just pair that with some average risk management and you'll be fine. You'll be golden. It's like the difference between having a great strategy or having a great risk management approach. You don't need a great risk management approach. You can just have an average one. But if you have a really great strategy and an average risk management approach, you're still going to do very well. You just can't have a poor risk management strategy. That will never work. But if you have an excellent risk management strategy, but you're just not clever with the charts, you're not going to succeed either, because you're just going to be managing bad ideas and losing trades. So there needs to be a balance. What is the accidental bullish R2D2? That's a great name. What's the D though? R2. So raid 2? How does that work? What's D? Order block. Discount. Raid and then discount. Raid 2, discount 2. Is this a new trading framework? 2 raids? I'm not going to think about that. It's confusing. Wafik, what is the best session to trade indices? It depends on you. If you're going to have to stay awake and get no sleep forever, if you trade the New York session, I would not recommend that. But if you can trade 24/7 and you're a robot, the best sessions would be New York, if it's a US based indice, and London if it's a European based indice. Samuel, hello, I'm using your calculator. Can you please add gold? Gold is just the same as EU or GU. The pip value is just 10. So if it's like a 10 pip stop loss on EU and you get like 1 lot to trade EU, then it's the same on gold. shimmy on. Let's play with the replay bar. That sounds like a lot of fun. I would love to play with the replay bar. I just want to see how many questions I have. Not too many actually. I'm just going to speed through the question. Yeah. And then we can play with the replay bar. Knowing me, I'm not very good at speeding through questions. I kind of go in depth, but trust me, I'm going to give very brief answers, but brief but direct answers. All right, let's go. Accidental, could we go through my daily buys today and expectations after the opening? My expectations are today. This is what I was looking at. You can just take a screenshot and have a look and just find them yourself. But yeah, we can talk about it after the opening. Just long story short, it's a Monday. There's not much news on Monday, and price likes to save volatility and key areas for these days, so I don't expect much at all today. Joseph, I have good energy, bro. Thank you, my man. It's the my water. Gotta stay hydrated. I'm actually a pretty low energy person in person. Does that make sense? Yeah. I'm quite, if I had to describe myself, quite mellow. Mellow sounds sad. I'm not a sad person. I'm a quiet, happy person. That's what I am. That's a good way to say it. Goodwill. Nah, not a bad thing actually. It's good to laugh. Yes, sir. CB Hagen. Yo, what's your win rate for the past 3 months or month? On indices, I see your kill zone is expanded, including London dead zone. Do I have a specific time range where I find most trades? Yep. So first question, what is my win rate for the past 3 months? It's a pretty high win rate and it's above 80%. And my kill zone dead zones is from 2 o'clock to 12. So it's from the London open to the London close. And in between that, you have that separator, which is 7 o'clock. So the very early start of New York. It's not the bell. 9:30 is the bell for the equity open. And when would I find most trades? It would be during the New York session around the equity open. Sultan, am I a trillionaire? That is a secret, Sultan. I cannot tell you that. Nihal. Euro and pound has SMT. What's my view? If they have SMT, it just means that they have different strengths. So euro is stronger. So if you have a long setup forming, I'd place it on the euro as opposed to the pound. But that's all that is. That's just a strength analysis, and that strength analysis by itself is not something that can direct a trade idea. That's just something that helps you pick the stronger one. But yeah, you need objectives first, and then you can do a relative strength analysis. And we have EG here. EG is just a luxury that we've been given. So if we have a bias on EG, for example, we want to see bearishness on EG. If we expect bearishness on EG, then we can expect weakness from EU. So right now, we saw EU was stronger than GU. Actually, oh, I can use my bar thing. I barely ever use this. Oh, exciting! How exciting! Now, how can we use this effectively? Okay, we've got EU and we've got GU. Okay, let me zoom in a bit more. I want to change timeframes on them both at the same time, but it's not letting me. But we can see here that, let me mark out a swing. Okay, so we have EU not reaching that swing high, GU reaching that swing high, but more shorter term. over here. So EU has broken that high, GU has not broken that high. So in a very short time frame, so if you're a scalper or a day trader, if you had a short, you'd place it on the weaker. So GU is weaker and EU is stronger. I think that's what we said at the start. Yeah, I just confused myself a bit. And then if on EG we expect bearishness, we can expect weakness on EU. So if we have a short on EU, then we'd place a short instead of on GU. Do I have a spill? Wait, what am I up to? Abby, why did I choose to not sell a course like most FX gurus? I haven't chosen not to sell a course. I think I just would find it incredibly difficult to make one. Because a course is something, to me, it's something that is a reflection of yourself. But the difference between most courses that you find online, they don't represent the trader, and they're very, very generic. Like I can just buy some random course for $100 and copy it and sell it to you guys. Chances are you probably haven't bought the other course, but that course won't be genuine. It won't show what I wanna. It won't say what I wanna say. It won't be written a certain way. And most courses are taught in a lecture content. They don't really give you exercises and things that can help your understanding. They just give you things to read. With my course, I'd want to give many, many exercises and lay it out in like a level system. Like after you graduate level 1 or level 2, you can move on to level 3, etc. I think so. The main reason why I haven't made a course is I haven't given enough thought on how to do it properly, and it would take a lot of time because I wouldn't employ someone to do it for me or to help me write it. I'd want to do it myself. It might be something I do in the future, but yeah, it's not going to be in the near future. It's going to take ages. Mumble. Actually, I want to say one more thing about that course thing. Courses are like subscription services. They're like the go-to way to make money in like this sort of trading industry. Like signal service rooms, courses, they're just digital assets. Like you can make it, you don't need to pay rent for it or whatever, you don't need to pay employees for it, you just put it out there and it just keeps making the money. So it's definitely the way to go if your goal is to treat it as a business just to make money. But for me, what I treat as a business is my trading. And the way I treat my community is not really as a business, it's more of like a hobby. Mumble, do I have a specific time frame for the RMR? Most of the time it's between the 1 and the 5 minute, but if you find a higher time frame one, for example, you find a 1 hour RMR, and let's say that this is your return area, and for example, let's say there's a bullish RMR here. If you zoom in to that return area, if there's a shorter time frame bullish RMR inside that higher time frame bullish RMR, then that's a confluence. Shreyas, EU Wyckoff distribution. I've never learnt Wyckoff. I hear about him, but I don't know what you mean. Apologies. And I should put Aussie trading instead of AZ. Missed opportunity. That's a good one. Aussie kind of sounds like AZ. Maybe. Maybe. I kind of like AZ. It's got sentimental value. But then again, Aussie has sentimental value too. You're messing with me. What time frame do I typically use for relative strength? Most of the time, it'll be a very immediate relative strength analysis. So it'll be on like a 1 minute. So on a 1 minute here, if we just look at these highs, it's lower, low, lower high, S&P lower high, NAS lower high, lower high. If we look at the lows, higher low, just higher low, higher low, lower low, higher low, equal. It's very similar. So if it's very similar, it doesn't really matter. So most of the time it's a very immediate relative strength analysis, but if you don't have the luxury to do that, you can always do a higher time frame relative strength analysis. So just comparing higher time frame swings. Bart, what's up Bart? Sorry to ask once again, that's okay, don't be sorry. What is the daily bias for NAS? Didn't we just create relative equal lows with the low on Tuesday last week? Yep. Wait, just? No, that was made from last Thursday. Wait, what? Didn't we just create relative equal lows with the lows from Tuesday last week? I was bearish today, but I see we have an opening gap ahead. We haven't made equal lows with the lows on Tuesday yet. Those equal lows on Tuesday were made equal lows with the week with the Thursday. And what's my bias? It's a Monday. I should probably write a note like saying what my bias is for today, so people don't keep asking. Long story short, this is what I've got in mind, all these key areas, and I expect not much for Monday because there's not much news on Monday. CB Hagen, what makes you decide to do relative strength analysis with EU and or with DXY? DXY is just the dollar index. I don't trade it, and I don't use this for relative strength. For EU, just EU and GU, that's all. DXY is just the inverse. So if we have super clean equal highs on DXY, if we have some super clean lows on EU, then that's a confluence. Luke Muller, what is a good way to improve win rate? I'm not sure where to. I have 38% with 3R on my back test, but not sure where to improve it. Different strategies have different win rates and RR. I'm not sure what you're trading with or what your system is, but with a 30%, 40% win rate and 3R, you can be consistently profitable and you can scale and do incredibly well. But ways, just general points to increase win rate. First of all, selectivity, so different ways to be more selective. So whatever you decide to trade, let's say you trade NASDAQ, ask yourself, do you use relative strength in your trades and your back tests? If you do, excellent. But if you don't, that's one step that can really improve that win rate. But yeah, there's just generic things to improve win rate, like correlations. For example, if you trade EU, if you've got a bearish trade on EU because you see clean objectives below, add in a correlating market. Let's say you add in GU. Does GU also have those objectives below? If yes, then you can take that trade. If no, then you can't take that trade. And that's another way to be more selective. And obviously the more selective you are, higher win rate you'll get. That's just how it works. Lion, I see where the price is more likely to go. I find the equal low. The question is, which RMR am I going to take, because it forms multiple bearish RMRs and not all of them are successful? That's a good question, and the main thing that comes to mind is the factor of time. So if you have a bearish R, I think the video I made yesterday was a good example. I talked about it actually. It was this trade on the Dow on Friday last week. Like this one over here. Like we have a bullish RMR. Can you see it? If we look for a raid, actually, we look for a rate over here. So we have a range, we've got a bearish rate, we've got a bullish shift, so we've got the R, the M, this is our return area, and this would be a failed trade. Our stop loss at the bottom of that low with objectives all the way above, and we just get stopped out a few points and it just run off with us. And then if you zoomed in, we can see a lower time frame RMR, so a raid down here. You break structure, so you break swing highs, you break more swing highs, you have a return in here, and you have a different setup in here. And you can see that this one would have been a winning trade. So your question of, you can see the objectives above, you can see the RMRs, so how can we be more in line with which one is going to fail and which one is more likely to succeed? And so as we said, time, you can have a look at what times both of these were the entry. This time was 8:30. Now just looking at 8:30, what's going to happen at 9:30, or what's after 8:30? Is there news? Is there equity open? That's probably the first thing that comes up into our minds is, oh, what about equity open? What's going to happen then? Is there going to be an influx of volatility? And if we just had the diligence to wait till 9:30, we would have seen that before 9:30 we would have raided this low. So it would be a rougher example. Wait, let me just draw this line a bit better. It would be a rough example, or just an unlucky trade or whatnot, if at 9:30 price was like here, and then at 9:30 just dumped and then pumped. That would be rough. That would just be unlucky, right? But that's still a risk you have to be willing to take. But since this trade didn't even reach 9:30 for it to fail, it's probably the most important factor of when your setups are likely to take place. Whether it's equity open 9:30 or specific news events. I hope that answers your question. And so that way we'd filter out this bullish trade here and we'd take this one instead. This was actually a video, this was the trade that I posted in my latest video. Should I plug it? I still plug. Here's the trade. This is the trade. Yeah. If you haven't watched it, check it out. But yeah. Do you like my... like, I'm trying to be as clickbait, but not as clickbait as possible with my thumbnails and my titles. Oh my god. Now that I look back at it, it's so goddamn cringe. But I'm trying not to clickbait ICT so much. I always get views on this guy. I don't want to, but it just happens. So I try to keep an even balance. Okay, anyways, that's beside the point. Next question, where are we? Jake says, how do I use the PDL or PDH in my analysis? PDH, PDL, just areas of liquidity, so I don't have to draw a million lines on my chart. I can, if I'm zoomed in, I can keep in mind that, oh, I guess we are like over here. This was taken on a Sunday, but it just lets me keep in mind where an area of liquidity is. And over time you'll realize that there's a tendency for price to only break one of them. If price only breaks the PDL, chances are, if yesterday was an expansion day, chances are today, PDH is not going to be broken. Very unlikely. However, you can tell that, I didn't talk about this in my video, but I'll talk about it now. US 30 5-minute chart. You know how I just said after an expansion day, we expect consolidation? But vice versa, same thing goes. If after a consolidation day, undoubtedly this day, this Thursday, is a very small ranged day, right? What can we expect after small range days? A big range day. So if we have key objectives of range day that we expect, and throughout the day we can see the previous day's low be taken out, so we have some short-term objectives taken out, previous day lows being taken out, and today we expect a big range and we have objectives above, some big objectives above. We can expect this day to break not only the PDL but also the PDH. So if we just keep that in mind, if we expect to break PDL and PDH on this day, let's just find an entry. So we're just going to be looking for bullish RMRs, looking for bullish setups. And that's one of the reasons that we'll manage to take this trade. And so on this day, it was an outside day, meaning PDL and PDH was broken. So that's a way you can use these levels. But long story short, just areas of liquidity. That's it. AB, I'm pre-ordering AC's course. Pre-ordering. Oh, I should make it like everyone that pre-orders gets 10 free exercises to help with your sentiment, relative strength, and psychology. Great idea. Oh man. Can I check gold, please? Why do you want me to check gold? What's going on with gold? Something crazy? Gold is retracing. Gold is retracing and reacting off a gap. Didn't we talk about gold? I think we did. I'm not sure what you want me to comment on. But these levels do look quite clean. Oh my, I seem like a wonderful person. Oh, you're too nice, oh my. AB says, do I take RMRs that don't touch a gap along with equal high raids? Raids don't have to be on equal highs, they can just be on a regular swing. My objectives are usually the clean ones, the ones that are equal highs or equal lows. If it doesn't touch a gap, then it may be in an order block, it may be in a discount or premium. So no, it doesn't have to touch a gap, and the raid doesn't have to be an equal high or equal low. Omai says, do I trade live on NFP day? Sometimes, if there's something clean, if there's very clean objectives that are close and left untouched prior to 8:30 when NFP is released, yeah. If there's a clean setup, yeah, I'll take it. But I won't take a trade at 8:20 and let it run throughout 8:30. I won't do that. I'll take a trade after 8:30 once an RMR forms. Marcel, AZ Trading, I understood my YouTube name to be referring to AZ, aka being all-inclusive. Yes, A to Z, since my channel contains all the NB concepts for ICT for a beginner. Great observation. Maybe not what I intended, but yes, AZ is quite inclusive. I think my content is actually directed to slightly more intermediate to advanced level traders, but because it's so consistent, like I don't talk about too many different topics, it's always the same ones over and over again. I think even if a beginner started with me, that repetition, they'd start to realize, oh, RMRs are raid, market shift, return, oh, gap. Like I say the same things over and over again. So I think, yeah, even a beginner would be able to pick up my stuff. Jimmy, can I share how to recover from losses? I'm in second phase MFF, but I'm negative 5%. How to recover from losses? Trust? Like, do you trust in your setup and trust in your overall profitability and consistency? If the answer is not yes, it's difficult, right? If you don't know that you're consistently profitable, it's difficult. But if you know you are, just trust the process. It's okay. Losing trades happen. Maybe you've lost 10 trades at 0.5 risk already. You've lost 10 trades in a row. It's very unlikely to lose 10 trades in a row. Or lose 5 trades in a row, whatever your strategy is. But recovery, first of all, maybe gain some confidence if you don't have the confidence in your setup to begin with. So trade with a lower percentage, just so you can get that confidence back. Like, the goal is not to get back the money first, the goal is to get back your confidence. And once you've done that, you can slowly increase your risk once again. Of course, you're on a time constraint because it's one of those prop firm challenges, but I'd say to look for more selective setups. So filter out some less clean setups, look for cleaner ones, and focus on getting that confidence back before you aim for objectives. Good luck, Jimmy. Luke Malar, I only trade the Dow in London session. What do you think is a good, the DAX in London session. What do you think is a good relative strength? Isn't, what's it called? FTSE? DAX and FTSE? Those are both UK or European indices. Yeah. DAX and FTSE. Alien Gaming, how do I use order block for entry? Order block for entry, so I'm sure you know about the RMR, and the last R is the return area, and I always say you can return into a gap, return into an order block, or return into a fib. So if you look at this price example, you can return into a gap, you can return into an order block. These bearish candles over here that created a shift in structure, this is the order block to my understanding. So it's not just this lower one, it's this entire bearish continuous candle. So when price retraces into there, you can either choose to enter at the top of the candle where it's most sensitive, or you can opt to enter at a better price within the middle of the order block where the bulk of the orders took place, or you can choose to long at the bottom. That's up to you. And if you want to use a fib, bottom of the raid, bottom of the swing, top of the swing. This is a pretty messy fib, but yeah, if it goes below 50%, it's a discount, so it'd be a fair price to long. I just like to have a spare 0.1 intervals so I can see it much more precisely, I guess. It's not a big deal. Okay. Next question. Jay Quinn. Damn, you're late? Nah, you're not late. It's all good. Welcome to the stream. Marsh finally caught up the live Zoom session. Zoom? Wait a second. You love my videos? Oh, thank you, Marsh. I appreciate it. You're welcome, Jimmy. What's up, Spark? How's it going? And just like that, we've caught up with the chat. Oh, it's time for a stretch. Let me put my little my screen thing on up. Time for a stretch. Everybody, this is your cue to stand up, sit up, check your posture, drink some water, make sure us couch potatoes that are sitting on our computers all day aren't gonna ruin our backs for the rest of our lives. So do some stretches. Okay. Marsh, does the RMR apply to all Forex pairs and gold? I can't say it applies to all Forex pairs because I don't trade all Forex pairs, but all the Forex pairs that I do trade, yes, it does. But don't take my word for it, and don't take my word for anything. Just treat it as educational content for you to explore and experiment yourself. And if you find, and whatever your findings may be, use that. Abby, lots of Aussies here in Bali. Yeah, Aussies love going to Bali. It's cheap to fly there. Yeah, and it's cheap to live there, I think. It's like the go-to holiday tropical location. Shirobaka says, roar. Hello, Shirobaka. Naked FX. What's up, legend? How's it going, Naked? Am I visiting Bali sometime? Let's catch up. I've been to Indonesia a few times. I've been to Bali a few times as well. But I'm not too sure if I'm going soon. Actually, I am going overseas in a week or so. And anyone that's watching the stream right now, I'm gonna spoil the surprise, but I'm gonna make like a clickbait video this week once I find a topic to talk about or whatever. But I'm just gonna title it "Goodbye" or like "Goodbye YouTube" as a prank. But I'm not leaving YouTube. I'm going away for like a couple weeks. But I'll just title the video "Goodbye." Okay. Yep. You guys have the inside word of that video. But no, I'm not going anywhere. Hello Jay. Just found me. Thank you for what you're doing. New to ICT methods. Have watched a few of my videos. How long have I been using these, and do I focus only a few assets to trade? How long have I been using these? I started with ICT pretty much within the first couple weeks of knowing what trading is. So I'm very fortunate to have discovered him early on. And do I only focus on a few assets to trade? Yeah, just these ones over here. These are the main ones. I don't even trade all of these. Most of these I just use for correlations. The ones that I trade primarily are the green indices, not the FTSE, and the major pairs, so Euro, USD, Pound USD, Euro Yen, Pound Yen, Euro Pound. Okay, maybe I do trade most of these. And gold. I don't trade silver or plat, they're mainly for relative strength. Sometimes plat, sometimes silver, but not plat. Plat, the spread on the broker is like 200 points. It's ridiculous. So never again. I placed one trade on plat just for fun, because I didn't realize how much the spread was, but it was too much. And DXY and VIX are just correlating markets. I don't trade those. Marshpedia. Clickbait? What do you mean? Maybe use this. ICT trader buys private jet and bids farewell to YouTube. That is a great title. I'll give you a commission if I use that title off the video, so you'll get 50 cents. It's pretty good. You're welcome. Go to Anthony. Thanks for coming in. Kuno. What's up, Kuno? What do I look on every time frame? Liquidity is what I look at. So whether it's a 1 minute chart, if I see something interesting, like some kind of relative equal highs, it would be much better if these highs were ridiculously clean. But doesn't matter what time frame it is, that's what I'm looking for. If something seems ridiculously clean, then that's what I've got my eyes on. Like here, like all these lows here, just left untouched. All this liquidity. Oh. Well, first of all, it was over here, just these areas of liquidity. On a lower time frame, it would look very clean, but more liquidity now. So if something is very clean, then it's a likely objective. Pretty clean. And then down here, pretty clean. But we're not there yet. Oh, we are there. So that pretty clean area, it's there. What haven't we reached? I'm thinking of gold. Yeah, down here, pretty clean. But above relatively clean. So that's what I look at, just liquidity. And then you can factor in other concepts like liquidity on other markets and correlating markets, etc. Please make a top-down analysis of how I take a trade in indices from the monthly to the entry time frame. I have a video on higher time frame analysis. Let me just get it up. Here we are. So I called it top-down analysis. So check this video out. I'll just link it into the chat. But the take-home message on how to do a top-down analysis is to keep things relevant. That's like the key message in that video. So let me just go to a clean chart. Okay, I have nothing on here. So let's say we're on the NASDAQ on a monthly chart. Instead of marking out all the key areas, like this monthly high, this monthly low, this monthly low, like if you're a day trader, we don't care about these areas and price. It's too far away. There's no way prices are just going to go there. There's too many areas where price is right now that we want to aim for. So you have to keep in mind, what type of trader are you? How long are your trades? If you hold for 10 years at a time, then sure, probably going to mark out this all-time high. Because if you place a trade 10 years time, it's probably going to get hit. It's an index market, right? It's very likely to be hit. But if you're a day trader, you hold for like an hour to a couple hours to one day, then you want to look at what's next to price. So if you just think about where price is now, in 2 hours time, where do you think price is going to be? Like, price is probably not going to be down here, and it's probably not going to be up here, especially not today, because it's a Monday and there's no news on Monday. If any time, it's going to be on one of these days. So with that in mind, we already expect Monday to not move much. So in a couple hours, where do we think it's going to be? So we look at price close. So what's in price in here? So then we start to look at this low, this high, then we zoom in a bit. Maybe this high, this low, right? Do we see anything stupid clean? This is pretty clean, right? These equal lows look very, very clean. So yeah, this would be the objective. But once again, it's a Monday. Is it likely to reach a key objective on a Monday when not too many people are trading and it's the very start of the week and people haven't even come home from their holidays yet? Right? It can, but it's not likely. And as traders, our job is to just push things to the side of what's more likely. I hope that makes sense. So yeah, so if you keep zooming in, you just want to find what's above price, what's below price, and what's it likely to reach for the type of trader you are. For a scalper, even this high and this low is too far away for a scalper. A scalper wants to like this high, this low. That's what they're looking for. Or maybe they're like hyper scalpers and they're like looking for this low and this high, right? So it all depends on the type of trader you are. So like if I'm a scalper, there's no way I'm going to be looking at these lows. Okay, next question. Do I trade Bitcoin from Alien Gaming? No, I don't trade Bitcoin, but I'm pretty sure I've drawn on the Bitcoin chart. No? I swear I've drawn on the Bitcoin chart. What? Which one did I draw on? maybe not. I think I must have removed it. I used to do a bit of analysis on Bitcoin, but no, I don't trade it. TCAS. Oh, Kuno, thank you for answering. You're very welcome, Kuno. Not too many questions today, so we get the luxury of answering every question. TCAS, why isn't trading easy? If I was to follow everything you said, I still don't think I would get the same results. What do you think makes the difference? Probably emotional maturity. Because if you follow the exact same things that I do, you're going to get the exact same results as I get. If you gave a robot a set of rules, let's call them robot A, and we gave robot B the exact same set of rules, do you think you're going to get the same results? 100%, no doubt in my mind. Both those robots are getting the exact same results. But what if we get one human and another human? Let's say you get your mom and you get your dad, and you give them these rules. Granted that and let's say one of them has trading experience and one of them doesn't have trading experience, or let's say one of them is a bit emotional and one of them is not very emotional. Do you think they're going to get the same results? No way. 100% chance. There's no way they're getting the same results, because the way they manage the position, their stop loss, the profits, like how they take their profits, they're all going to be doing it differently. And it's all because of emotions, not because of rules. And that's because our rules are not specific enough. And so our job is to make rules for ourselves that are so specific that we don't even have the opportunity for emotions to take place. Like, let's say we have a trade. Okay, what are we gonna manage? Once we've got without even talking about how we came to the entry, what do we have to manage after we place that entry? There's two things. It's not difficult. It's the stop loss and take profits. Stop loss, we got to manage where we put it, but we also have to manage, do we trail it? When do we trail it? Do we trail it above our entry position, etc., etc.? And our take profits. Where do we take profits? Do we take it close? Do we take it far? How much do we take off at each area? Do we only take off 10%? Do we take off 50%? Like, these are all the questions that we have to think about what we're going to do before we even place that trade. So if we make it like such a rule-based system, there's just no opportunity to like think of what to do, because it's just a rule. Like if we say this partial, I'm going to take off, oh Jesus, like say at this partial we take off 10, this partial we take off 40, over here we take off the rest 50. Then when price reaches this area, we go into our broker, we take off 40%. We don't have that opportunity to think about, oh, how much should I take off? I took off 10, should I take off 20? Should I take off everything, etc., right? Because we have got rules and we've got a plan, we know exactly what to do. Hope that answers. News is our fuel. Yes, news is our fuel. News is the excuse that injects volatility into the market. Like all these positive, negative, all these positive, negative values, these values are not what's changing the price. Unless it's something very fundamentally important, like interest rates. If your interest rate of your country increases by a lot, no doubt over time, your country's value on Forex is going to increase in a higher time frame. But as a day trader, once again, if it's likely to, if you have positive results on news, news doesn't care about that. News just knows where the liquidity is, and if there's liquidity below, if there's like clean liquidity below, it doesn't matter how positive the news is, it's going to go to where that liquidity is, or it's very likely to go to where that liquidity is. So yeah, news. And when is it likely to go to those areas? During news. That's our fuel. Pawan, how can I find the right fair value gap and which time frame to find fair value gap? Very broad, but depending on type of trader you are, 1 to 15, you'll be alright if you're a day trader. Just find what's clean. Like here on a 15-minute chart, we can see a tiny fair value gap in here. If we want to refine it, go down to a 5-minute, we can see it's much cleaner in a 5-minute. You can see a clean gap, you can see a clean order block. Let's go to a 3-minute, have a look. It's still there, but it's not as clean. And on the 1-minute, that gap would be like up here. So which is the cleanest? I would say 5-minute looks the cleanest. So we'll just use this gap, 5-minute gap. So you have to, it's not just one time frame that's the best. You just have to keep swapping back and forth to find what's cleaner. Fed is speaking later, can move market a bit, but Mondays they just set weekly range. Set weekly range? Monday is unlikely to set a weekly range during a week with very highly volatile news events. What did I say? Volatile? Jesus. Monday is likely to have a range, but not the weekly range. Just set a range, like generate liquidity above and below the market. That's what's likely for a Monday. And then throughout the week, let me just get rid of this. And then throughout the week, we have like a range of liquidity. Tuesday, Wednesday, Thursday, Friday, they all have high impact news events. That's when they'll take the liquidity and take more liquidity, etc. For the weekly range, but it is likely to create a range during a high volatile week. Alright, let's just go to some random Mondays. Alright, scroll back. This one, I picked this one. Right, we have a highly... Oh, I remember this. I'm pretty sure I took a... Did I? I definitely have a video. I'm pretty sure I took a trade on this Monday. I'm pretty sure I took a long. Yeah, I definitely took a long in here. New York, 9:30. I'm pretty sure that my trade was on there. That was my trade in an RMR. 29th of August, 100%. That was my trade. I remember this. But anyways, I was gonna say, yeah, Monday after an expansion day consolidation. So it's not gonna paint the weekly range, but it's likely to create a range, right? It creates a range, and then if there's news, 30th of August. Let's have a look. 30th August. Right, 30th August. We've got high impact news at 10 o'clock. So this range that we created on Monday, we broke a high at what time? 4 o'clock and 10 o'clock. That's when news ticked. So Monday was that range, that was the day that created the range, not the weekly range, but those areas of liquidity were kept in mind for the week or for the next day. So that's something that's likely to happen this week because we have lots of news. This was also NFP on this week. Yeah, but we have lots of news this week, and Monday is less likely to reach those key areas. Let me just have a look if there was a very key area nearby. Yeah, this one, yeah. This daily swing low. This one, daily swing low. And so that key area wasn't taken on Monday. It wasn't even taken on the Tuesday high impact news event. What did they have? Tuesday, what date? 30th to the 2nd. 30th, 31st, we had high impact. Friday, high impact. Thursday, high impact every single day. This week is basically like this week. Like the week starting 30th of August or 29th of August is very similar to the week starting this week. But all these high impact news events, that was when those key areas were taken. So this daily low was taken during that news event on Thursday. And like we said at the start of the video, if price wants to go from A to B, doesn't just go like that, obviously. Otherwise more people would win. A lot of people would still lose, but more people would. So price instead is likely to create some framework like this. This is the Goldilocks framework, the power of 3 framework, where we have some manipulation, expansion, and a bit of consolidation at the end of the week. And over here, if I just do a depiction of it, Jesus. Okay, maybe not like that. We have the week start over here. We have that manipulation. We have that expansion. And we have that close of the week, that ranging. But then we had NFP. So, yeah, I think you get the point. It's not meant to be a perfect like this, but this is a general framework of how candlesticks paint. Whether it's a whole year in this and the first couple months are the manipulation, or it's a week and the first couple of days is the manipulation, or even a session. This could be one session, like from the start of London to the end of New York, so London close. Like this could be how that paints. And then you could go even zoom in more. Like this could be one single news event that happens in 1 minute. This is 1 minute. So when a news event ticks, you could have a manipulation for the first couple seconds, pump, and then have a range again. So this power of 3 framework can be applied in all time frames. Kuno. There's no guarantee that you'll win. We just look for a strategy that would make you profitable. You can be profitable with a 40% win rate, 3 RR per trade. 100%. That's a great strategy. 40%, 3 RR, solid. And if it's a highly occurring trade setup, very good. Whereas my most selective setup has a high win rate, a decent RR, but it doesn't occur that often. It's quite rare. So that's another factor that you have to filter in. How often does that setup happen? What's up, sexfinds.info? New a dating for all tastes and Jesus. Why is the English so rough? How do I ban this guy? I can't even ban him? Are you kidding me? Wait, let me find a way to ban him first. Okay, they should be hidden now. They should be banned. Okay, Shiro Baka asks, not trading related, but am I going to get channel emotes anytime? Also check Discord. Channel emotes? Oh, like for the Discord channel. I haven't thought about that, but now that you have put the idea into my mind, I guess it could be a fun little side thing to do. Who's going to make the emotes? Do I have to make them custom? Just make a little pig emote? Maybe. I'll think about it. Okay, you're now mod. Corey, block the spam. Yep, blocked it. All good, Corey. I might have taken ages to block it, but he's gone now. Do I have a Discord community, Marshpedia? Yes, I do have a Discord community. It is one of the top links in the description of most of my videos. Let me post it into the chat. What? Is it not here? Oh, I didn't. My Discord community didn't exist at this point, so that's why it's not at the top of the description. I'm so lazy. I'm just finding the link through my previous videos. Okay, it's posted. There you go. What time is it? It's 8:48. It's almost 9:30. We'll keep that in mind. Kuno, not gonna lie, your voice is relaxing AF. Aww. Thank you, Kuno. Hopefully I'm not putting you to sleep. Otherwise, you won't be able to watch the Equity Open. Accidental. Did I have any other mentors besides ICT? I had a few online people that I watched before ICT, but they were all like very stock based, because I think that's what the hype was at the time. So they were all into buying options, buying stocks, which stocks to look for. Nothing related to pure technical price action, that sort of thing. So yeah, pretty much just ICT, and then anything that he'd say, I'd go into the charts, test it myself, come up with my own findings, and yeah, that's how I got to where I am. Jaquin, if trying to pass a funded challenge, do I still take partials or try hold? I always take partials, regardless. Whether it's a challenge, my personal account, or just for fun. Yeah, that's just how I trade. I guess if you're in a challenge, you could... I was going to say this, but I'm actually against it. I was going to say as soon as you get into profit or reach your first partial or whatever, just break even stop loss, because to pass a challenge, it's not about if you can win or make enough, it's just about if you don't lose. Because most people don't fail by not making enough, most people fail by losing too much. So I was going to say you could just break even immediately, but that's not a good habit. I would not recommend it. Don't know why I brought it up, but yeah, would not recommend that. Honestly, just trade how you would trade. The only thing you can change is probably how much you're comfortable risking. Because it's a challenge, it's a demo account, fuck it. Risk 5%, risk 10%. Just finish it, finish the challenge. If you fail, just buy another one. It's pretty cheap. It's not like you're losing like 10%, it's just a fee. But no, I just trade how I normally trade. Most of the time, that is. Johannes, yo, from Sweden. Sweden? Is that the land of PewDiePie? I think that's the land of PewDiePie. David Wozniak. Naz, today I'm bearish. There's a 15-minute fair value gap above price. I think this is the one you're referring to, the weekly open. So price may go up to close it. How do I decide which fair value gap to enter? The fair value gap that I decide on to enter will be the fair value gap in my return area of the RMR. This is not really an RMR. I don't see an RMR in here. This one would be the return area of the RMR, but it's not one that I take because of multiple factors. It's not as clean. Objectives aren't too clean. Sentiment still bearish. Buy side liquidity above, still got a gap above, etc. And is it the strongest? Okay, it is the strongest, but yeah. Oh no, yeah. So I wouldn't short because it's the strongest. So if I wanted to short, I'd pick the weakest. So I'd short the Dow. Because NASDAQ is making higher highs, S&P making lower lows, and Dow making more lower lows. So Dow's the weakest, Nas is the weakest. So if I wanted to long, I'd long the NASDAQ, but if I wanted to short, I'd short the Dow or the S&P. Probably the Dow, because you've got lower lows here, S&P, you've got higher lows. So this relative strength analysis, don't forget to do it. It's a very quick step. You can kind of see how quickly I did it. Just a quick couple clicks and you can kind of tell. Because it's either going to be obvious or it's either going to be very similar. And if it's similar, it doesn't matter. Conrad, what's my take on GJ? I'm pretty sure GJ just reached a key area at the start of the week, which I didn't want it to reach so early because I was not ready. GJ, GU, EJ, EU, GJ. I think it had equal highs. I'm pretty sure it had equal highs. Did it? Ah, no, never mind. It's got equal highs, but it's far away. Did you say you were bullish? What did you say? What's my take on GJ? Bullishness. that's my take on GJ. Can I end it there? Because EG, if it's bearish, GJ is more likely to be bullish. Do we have objectives? Yeah, we've got objectives. Does EJ have objectives? EJ took out some clean equal lows. So if there's a bullish reaction on EJ, which there's a big bullish reaction on EJ, then we're going to get a bullish reaction on GJ. And do we have clean objectives above for EJ? Honestly, not really anymore. Like just some regular old swings and maybe this swing high, but it's very, very far. But nonetheless, it is an objective and it's arguably very clean. So this could be an RMR setup, a higher time frame one, like a raid, a shift breaking some swing highs, shift breaking a swing high, return into a fair area, and a long. So this would be like a swing trade almost. It's probably going to take a while for it to reach here. Who knows? Yen. Do we have news? GBP Tuesday, not yen. We have yen on Thursday. It's orange. Who cares? Don't care that much. Yeah. Wait, next week? If there is like monetary report? No, not really. Yeah, this is a bit too far away. This is like Christmas time. But yeah, that's a potential bullish RMR setup. Oh, what did I say here? Yen futures equal low, EJ, GJ expect bullishness. I think this was at the start of the week. What's yen futures? Yen futures. This one. These equal lows here. But this high needs to be taken first. Then it'd be more likely. If it's clean and it's equal, I don't like the look of it. It looks a bit clean. And if yen pumps or futures pump, then yen pairs dump. But if those futures, I'll go back to that chart. If the future pumps and breaks those highs and causes these yen pairs to dump, we have to see how far it dumps. Does it dump to break lows or does it just dump into a return area? If it dumps into a return area, excellent. Then that's a confluence for the RMR. Where am I up to? Shaba TV. What's the best comparative pair with pound USD during relative strength? I would say Euro USD. Euro USD, pound USD, they're the closest and most correlating markets. And you can use the cross Euro pound to help you with that relative strength. Because if you have a strong bias on EG, like let's say we want to see bearishness after reaching this gap into daily equal lows, then if we want bearishness in EG, which one's going to be stronger or weaker compared with Euro or Pound USD. Of course, the Euro is going to be weaker. Euro GBP is going down, so Euro USD is going to be weaker. So if we're looking to short any of these pairs, if we're looking to short Euro or Pound USD, we'd short the Euro, and if we're looking to long, we'd long the Pound. I just have, let me find something on my Discord real quick in my journal, because the Euro USD and the Pound USD were the very first forex pairs that I traded with, and the strategy that I used with EG is still what I use today, so I haven't changed it, apart from the entry method. Can't find it. All I found was this old quote that I wrote, but I couldn't find the pictures of it. I drew like diagrams and stuff. I don't know where I put it. But relative strength in correlating assets. Let's say A is strongest, B is weakest. So let's say Euro USD is strongest, Pound USD is weakest. What did I say? If flow is bearish, we want to short B, of course, because it's weaker. Just because A is the strongest, we might be tempted to long A, but since the overall flow is bearish, what I mean by overall flow is there's just higher likely objectives below. There's just cleaner objectives below. So when the flow is bearish, we want to follow flow as the priority. So objectives or flow is priority, and the strength is just a selectivity boost. So long story short, relative strength is just a selectivity boost, not a direction. Okay. Ezekiel, can I watch AUD USD? I'm looking for 1 minute confirmation and I'm not sure if it occurs. I don't want to give the okay to you, like for your trade setup, because if it's your setup, it's your setup. I don't know what your setup is. I'm not sure what you're trading, what you're looking at. What time is it? It's 9 o'clock. Do we have objectives below? We have a swing low. I mean, it's okay, but yeah, I don't know what your setup is or your trade framework. Update. Oh yeah, I wrote a note. We did this today, I remember. RMR bullish Monday, Sunday had news, Thursday next news. Update on if bullish reaction occurs during New York. Unlikely. So we'll monitor this in New York. So it is New York at the moment. We're seeing if there's a bullish reaction. We'll see. I don't know. I don't want to give you the okay or not. But what I can say is, whatever your trade is, know what your stop loss is, know what your risk is, and find your lot size. Have a plan. Plan your partials. So if you've got your plan your partials now. Where are you going to take off your partials and how much are you going to take off? Say take off 20 or 40. Just plan it now. So later on, when trades reach those areas, you don't have to think about it. That's what I can say. Okay, Jacavis. Look for what is clean. Helps us see the clearer picture. Yes, very, very good. Kuno-kun, do I use seasonal tendencies and COT for analysis? Of course. These are the 2 out of the 3 fundamental drivers that I use for fundamental analysis. I think I have a video on this actually. It's one of my older videos. I don't know why I talked about such in-depth stuff during like my first couple videos, because no one watches them. Like this one here, higher time frame, fundamental concepts. This was just a Q&A. One person or one of my viewers asked a question and I did a whole video just on that. So long story short, fundamental concepts. So nothing technical. Where are the 3 points? Higher time frame analysis, fundamental and technical. So 3 things: seasonal analysis, so seasonal tendencies, COT analysis, and interest rates. So those are the 3 fundamentals that I use. So yeah, I do use those. Check out this video if you haven't. It's pretty old, but it's still very relevant. Where we look at COT charts. We look at seasonal analysis, seasonal tendencies, and we look at interest rates, and we look at the change in interest rates. Like, I don't know why I went so in depth with all this. I just started, but I was like, oh, this is good stuff. Everyone's gonna want to watch this, but no one's gonna watch your stuff if you just don't have a community. So I was like, I better focus on maybe content that will make people want to watch me first, and then I can start to talk about some more cool things that you guys don't care about as much. Okay. Anyways, those are. I've noticed the smaller the New York Monday range, the quicker they move away. I suppose if we have a small Monday range, then on the next day we tend to always break that range. It's quite unlikely to have 2 inside days in a row, so generally, yeah, if Monday's pretty small, like this Monday, then the next day likely to break that range. Jakavis, what broker did I use, and if I use a prop firm, from which one? So brokers, I use 8cap, it's an Australian regulated broker, that's where I'm from. And which prop firms do I use? I use a few. So FTMO is the most popular one, the one I recommend. I use TFT and TPT. Maxstar. Hello, would I say last Friday was a buy model? On YM? What's YM? I'm having a brain fart. YM. Dow? Is that what they call it? Dow Futures YM. I didn't know that. Last Friday. Did I make a trade on a buy last Friday? Would I say last Friday was a buy model? Yeah, I guess. I mean, I took a trade last Friday on Dow. So, yeah. This one. My most recent video. This trade. Entry, couple exits to the end of day. Where is it? This trade. Yeah, right there. And it's an RMR pattern as well. Raid. Short-term shifts all along these swing highs. Short-term shift, short-term shift, etc. Return area in this gap. Entry, missed entry, another pump, return area in this gap, could be your entry there. So how did I get this lower entry down here? In the video on the NASDAQ, at 9:30, we have this bullish RMR, so raid, market structure shift, return into this gap over here. But as NASDAQ retraces, we don't want to place that trade on NASDAQ. We know that the Dow was stronger. So at 9:41, instead of placing that long on NASDAQ, here on the Dow at 941, that's where we placed our entry, right there. And that's the reasoning. So yeah, buy model. J Quinn, what is my highly selective trade model? It is the RMR pattern, but when it looks very clean with very clean objectives, and it's in the framework of that power of 3. And you have correlating objectives on some correlating markets, and some, yeah, that's pretty much it. A clean RMR with clean objectives on correlating markets and in the framework of power of 3, and your entry is at a time where it's likely to reach those objectives. So it's not in the Asian session or some random time, it's probably next to news, just after news, or just after equity. Giovanni, thank you. This line is very good. Keep it up. Oh, this live. Thank you, Giovanni. I'm glad you enjoy it. Tio, how can I confirm that I'm going to short or long 2 minutes before? I'm not confirming 2 minutes before if I'm going to long or short. I'm not changing because the objectives I'm trying to reach aren't changing. Like, for example, if this is my objective and price is up here, if I don't see any clean objectives above and I see like all these clean objectives below, it doesn't matter what time it is. If 9:30 is here, if news is here, my bias is going to be bearish. So my bias isn't changing unless unless it's taken before those times. Then obviously I can't look to short again when those areas are taken. So how can I confirm that I'm going to short or long for news events? Is I see if those objectives are taken or not. If they're not taken, then my bias is still my bias. If those have been taken, I'm probably gonna have to change something. I've got to aim for something else, or wait for more liquidity to be generated and aim for those. Another way to confirm if I'm going to short, I think the better question, instead of asking if I'm going to short or long, is which one to short or which one to long. That's a better question. So let's do a relative strength analysis right now. Let's go into a 1 minute chart, short time frame. Dow made some lower lows, some lower highs. NASDAQ made some higher highs, higher lows. S&P just a lower low. So S&P and Dow are pretty similar, but NASDAQ is obviously stronger, right? Much higher low. Just a lower low, more of a lower low, reaching this low over here, not reaching this low over here. Dow is the weakest, right? Pretty quick, shouldn't be too difficult. And if it's quite obvious like it is now, then we know exactly which to long. We're going to long the NASDAQ, and which to short. We're going to short the Dow. And depending on which direction our bias was, we know which one to participate on. So poor S&P over here is not going to be one that we participate on, but it can be one to use as analysis. Like, what the hell is this? I would call this stupid clean. Like, this is getting taken out regardless. I don't know when, whether it's today, tomorrow, this week, whatever, it's going to get taken out. It's a bit clean. Same with this low here. It hasn't reached stupid clean status, but if it's like like that, you get the point. It's stupid clean. Like, it's gonna get taken out. But today is a Monday. You got to keep in mind key areas are left for days with volatility. We do have volatility at 9:30, and this is very close. I would call this very close. So it could be a short-term objective. But we can also see that we have conflicting objectives right now. Here on the Dow, we have some equal lows. here on the S&P, we have some short-term equal highs. So that's a conflict. And there's always going to be cases when you have a trade idea and there's going to be a conflicting objective somewhere in the markets. And during the times when you have very little conflicts and a lot of correlating objectives, those are high setups, high probability setups. But when you're looking at things with a lot of correlating objectives, a lot of conflicting objectives, then it just becomes a lower probability environment. Okay, let's move on. You do this full time, right? When did I start, Rohan? Yes, I do this full time. I've been doing it for a little while now. AVAX. Look at the ELs, equal lows on GJ. I'm pretty sure I've marked it out, did I? It's a bit far, isn't it? Wait, which ones? Oh, these ones? These ones? Oh, here. Yeah. I think it's clean. A Friday and a Monday. You know what? If EJ didn't raid this so well and left those higher time frame equal lows like this, and GJ also didn't raid those yet, then yes, that would be a big confluence to be short. Because you have two correlating markets with two big objectives that are clean. However, EJ raided it, GJ didn't, and now we have conflicting objectives once again. So it's a slightly lower probability environment. Do I use a daily bias, or is there a time frame I use to get the bias and use it? Of course, I don't want to be swapping back and forth between bullish and bearish every swing. That's a scalper's job. It's not my job. Right? Like I don't want to be in a trade and then as soon as it's stopped me out, I don't want to immediately look for shorts. This is what a lower time frame, slightly less plan orientated trader would do. You can find success with it, but it's just not for me. So yes, I like to have a bias to help me filter out direction. And during days where it's difficult to find a bias, or difficult when there's different correlating objectives, like these equal lows and S&P these equal highs, then it's hard. It's hard to find a bias. It's not clean enough. And they're pretty short-term areas of liquidity. I like to have slightly more, what's the word? The word's not impressive, it's more, what's the word? Slightly more meaningful, I guess. Slightly more meaningful equal lows or equal highs. Like this would be a bias, right? But this directional bias is not going to be for today. Because Monday, no news. I talk about it. I've said this many times. Days with news is when that is more likely to be reached. That's kind of why I don't want to stream on Monday, because it's a boring day. But yeah, that's the bias. Fat equal lows, S&P kind of. You've got some equal highs here on S&P and US 30. You got some fat equal lows as well. 9:16, almost 9:30. I do want to watch equity open live so we can watch live price. Wait, what? Where am I up to? CB Hagen. Today's vid was on the 25th, which was an RMR textbook setup. What about days like the 24th, where the New York didn't show an RMR setup? Do I have a trade criteria for that setup? If there's no the RMR is the criteria, but 24th on, I'm assuming, are you talking about the indices? 24th. because we're in such a small range, you're probably going to have to hunt short-term liquidity. Do I have a trade criteria for that setup? I'm sure you can find many RMRs in here. Like, let's look for a bullish one, like a raid, shift, return, entry, stop loss, objective, maybe a partial somewhere, maybe at this gap a partial. So maybe you take one partial, stop loss, break even, and get stopped out. That could be an idea. Could look for a bearish, maybe a raid, short-term shift. I'm not sure if there's a gap in here, but if we use a fib, it retraced into a very steep premium. And we can use this as an order block. So price retraces into that order block. So that could be your short, stop loss, objectives. Maybe objectives here, maybe objective at this gap. So there's always RMRs in different places, but I have no idea what I would have seen live, because it's hard to imagine what I would have done. Johannes, yes, PewDiePie is from Sweden. Great knowledge. Crocodile Dundee is from Australia. Yes. Where else are crocodiles? Maybe like in the Sahara? No, not the Sahara. Jesus, that's embarrassing. The jungle, Amazon. Crocodiles in the Sahara. Considering I trade both the London and New York, why change colors in the session? Just to get a differentiator. They're two different sessions, two major different sessions. Why not, right? It doesn't destroy my eyes. I still think it looks clean. So London, New York, it's very easy to like see when a move happened. Like let's find a big move, this move. Like put my cursor there. Okay, it's not in London or New York. It's probably FOMC. When is that's at 14. This is probably FOMC. Let's go into another big move. Let's right here, this move. Where is it? Oh, it's in New York session. I don't have to put my cursor there and see, oh, 9:45, 9:30. I think that's New York. So I don't have to do that thinking part. I just see it's in pink. It's in New York. Right, like this. It's in New York. What is this? What time? 8:30. CPI? I'm pretty sure this was CPI. 13th of October. 13th of October. Yeah, CPI. I'm pretty sure I made a video on this trade. Did I? I can't remember. I think I clickbaited saying who would have had an entry down here, but my entry was actually like up here. I'm pretty sure that was my trade. I'm really good at remembering where my trades are, because I recognize where price action, or what the price action was, what time it happened, and the news. But yeah, once you spend enough time in the charts, you're gonna notice this about me, or you're gonna start to notice it about yourself. Like all these patterns and trades you take, you look at somewhere random and you're just gonna be like, oh, that was the trade I took 12 months ago on a Friday. But yeah, that's a bit extreme, but you'll definitely start to realize these patterns over and over again, and it helps with consistency. Where are we? Oh my, is there a specific month I won't trade? If I had to choose, probably December, but not because of the charts. Probably because I want to spend more time with family, friends, that sort of thing. That's why I'm going away for a couple of weeks at the start of December, so I won't be posting videos then. But if I had to choose a month, technically, I would choose a month based on which market's seasonals or fundamental data has very sloppy price action. Because all the markets are different. I can't be like Euro, Pound, I'm not going to trade March. Pound, Yen, I'm not going to trade March as well, because they have different seasonalities in different months. So depending on what their seasonalities are for different pairs, I'll find one with very sloppy price action for a certain month and not trade that month for that pair. Hope that makes sense. It's 9:22. I really don't want to miss 9:30 because I think it would be fun just to watch some random shit. Sorry for swearing. Just some random price action to start off with. Jaquin, would I consider showing some of my losing trades? It would be very useful to me. Of course. I would love to show you some of my losing trades. But I'm working on it, Jaquin. I'm working on it. I'll get a video out for you. Store hide. Am I likely to take a long aiming for the equal highs on ES? Or would I rather expect a raid on these equal highs as a potential bearish RMR setup? If that's what you've got your mind on, these equal highs, you don't want to be waiting for all this price action just to look for a reaction. If you've got your mind on these highs, you want to be looking for longs. You want to be looking for longs each day to target that area, because that's your key area. The 24th was Thanksgiving, so should not have been trading that day as New York was closed. Once again, it depends on your trading style and your pattern. If your pattern forms and you've got really clean objectives and they're not really far at all, because on that day you can expect low volatility. If you're like a short-term day trader, like a scalper, and you've got some really clean 1 minute equal highs and you've got a bullish RMR, sure, take it. That's if it's your setup, take it. But if you just want like some general rules, like generally we don't want to trade news events. Generally we don't want to what else don't we want to do? Generally we don't want to, I guess it depends on the type of trader you're. I can't really say these things for all types of traders. But yeah, there are always these general rules, like in a fib, you always want to wait for a discount generally before pumping, before entering. But the more you play around with it, you'll realize there are times, and you'll develop rules for yourself where it's okay to break certain rules. So that's like another step in your trading development, is knowing when to break rules and when it's okay to break rules. Obviously we'll need to know when not to break rules, but an important step is knowing when we can break some rules. Marshpedia, RMR easy model. Yeah, it's a pretty self-explanatory model, almost. There are a lot of intricacies within the RMR, but at its core, there's only 3 steps. Yeah, it's a pretty simple model. If I can just draw the model like very quickly, and you can see it, like raid, shift, return, and it's a pretty easy model. TI. So the priority to look, wait, Johannes. Wait, what? Where am I up to? Ah, G. I don't know if you can remember, but I asked you about the session indicator and the time was off. Yes, I remember. You're trading futures. You mentioned about CFDs, but I don't get what you're saying. Yeah, I remember. So with futures, like the ES... Oh, my phone's going off. That is my alarm for equity open. 3 minutes until equity open. But yeah, with futures, your timing down here is going to be off. So if you're looking at contracts, futures contracts and stuff, it's going to be off. What I mean by CFD is like if you just type NAS 100 or US 500 for S&P, like these ones aren't futures markets, so they'll have like the correct timing on the bottom. And for Dow you can type US 30. So instead of ES you can type US 500 or SPX 500. Johannes, weird question, but a bit of psychology. Did my life change after becoming a pro trader, or did you have to change some things in my life before becoming profitable? This is a really good question, because I think the time I started to learn more about trading was the time I started to become more disciplined in my life. I mean, to this day, I still really care about health and fitness, and I want to be disciplined, like have a routine and build a habit of exercising and things. But I think it was just convenient timing that when I reached that age where I started to learn about trading, I also wanted to take care of myself as well. I'm not sure if trading was a part of it. Maybe it was. I'm not sure. But I'm sure it had some sort of effect, I guess. Because your trading life and your life has similarities. Okay, I'm not going to answer any more questions just for the next few minutes because it's equity open in the next minute. Let's have a quick look. Nasdaq making lower lows, lower highs. S&P, same thing. Maybe Nasdaq a bit stronger. S&P. Dow is much stronger. S&P almost broke that high. Nasdaq hasn't broken that high. So Dow is the strongest at the moment. Nasdaq and S&P are pretty similar. Those lows have been left. So this is a likely objective in the near future. S&P's highs. Nasdaq. This is a Monday, so we wouldn't be looking to aim for higher time frame key areas, and there's not much news, so we wouldn't expect this to be taken out today. It's more likely to be taken out during a specific news event. But also we have this really clear sentiment, so sentiment's likely to be broken, but will it break this deep? Likely, but not on a Monday. Okay, it's 9:30. Let's watch. S&P broke the high. Dow is very strong. S&P has broke the high. This could be short-term manipulation. If it does, where would it reach for? Let's have a look. Nasdaq, does it have anything? It has a swing high here. If it creates an equal high, I wouldn't expect it to just dump. I would expect it to break it. Dow has reached a gap over here. We still have that Sunday gap above. This is scary. So if we're looking to short, we don't want to short Dow, even though there's clean objectives below. This is an important topic. If you only have clean objectives on one market and not on the other market, if the one with the objectives is the strongest in the opposite direction of the objectives, you still don't want to short this market. You still want to short the weakest. That's a very important point, because it might look very obvious, like, oh, this has got the objectives. If an RMR forms, I want to find a short on this market to target this area. You don't want to do that. A purpose of relative strength. So this might create an equal high. Nasdaq, did it create? Nasdaq broke the high. Did you see it had like that momentary hesitation? You'll notice at a lot of swing highs, price will create some sort of hesitation at these areas, just to entice that few more amount of shorters, buyers, stop losses, whatever, just to entice those people to think it's an area of resistance or whatnot before pumping up. But something you have to always keep in mind is if price is pumping, you don't want to just be like, oh yep, price is pumping. We have to think to ourselves, where is it pumping to, or where could it pump to, or why is it pumping, etc. So where could it be pumping to? We had the swing high, we have this Sunday gap, right? So this looks very likely. S&P, we've also got those objectives. Dow made relative equal high. You see this momentary hesitation, like we talked about on NASDAQ? This is like that sort of hesitation that if you're so zoomed in to like a 30-second chart, 1 second chart, whatever, is gonna get you to like short if you're a scalper. But this is just like something that you can watch to build your library of how price likes to act live. Of course, it doesn't have to break it, but it's. Would you agree that it's relatively equal, and that the liquidity above this high has not been taken from this? It's still resting. I would say that this area has generated more liquidity, right? We can argue that for sure. If there's more liquidity there, it's a more likely objective. But like I said before, if it's going to break it, where is it going to break it to? Like, we don't know how far it's going to break to, so we've got to look above. It might break to this gap here. So that momentary hesitation, you see how price was up here, went all the way down here, went all the way down here, and then pumped back up. How many people do you think would have been stopped out already from shorting? If you're like a hyper scalper and you saw this bearishness and you placed your entry, and if you factor in spread, your entry is probably down here. Like that's 60 points, depending on how much you risk. Like that's your stop loss for sure. Okay, let's have a quick look. NASDAQ. I'm not looking at chat, sorry guys, but I hope that my thoughts live might be helpful with learning. This is what I'm looking at. And I'm only keeping it within indices at the moment, but we can also look at Forex pairs, we can look at metals, and also DXY and VIX, but I don't want to make it overwhelming. We'll just keep this gap in mind, and we'll keep these equal lows in mind. So just the trade idea from here, it could be RAID plus reach, short-term market structure shift, return into a gap, place a short, stop loss at that RAID's high, and objectives below. Like, this could just be an idea, right? This would be a clean RMR setup, given that we've got objectives on correlating markets. So if we want bearishness on indices, we need bullishness on DXY. That would be preferred. So as long as DXY doesn't have some stupid clean equal lows, then it would be a higher probability trade, but we've got some slightly higher time frame equal lows. So if DXY dumps, indices are more likely to pump. So this might not be done pumping until DXY breaks these lows. So if we want to set an alarm there, we can set an alarm there. We can label. Okay. So that would be a conflicting objective. Back on the indices. Okay, S&P once again. NASDAQ. Where did we see that hesitation? Was it on NASDAQ? Or was it on Dow? It was on Dow. Okay. Did you see that momentary hesitation that I talked about? It's not by chance, and it's not like some random piece of price action because it's so low time frame. It's purposely put there as some sort of manipulation at that key area before that pump. And we see the same thing on NASDAQ. No, S&P I mean. Yep, here. You see this hesitation? Right there. It's hesitating, but it's close enough that we consider it as a relative equal high. It's close enough that the liquidity here has not been taken and it's been generated. So it doesn't matter how deep this retraces, it's likely to take this area. Actually, that's wrong. It does matter how deep it retraces, because if it just completely dumps, then we won't care about this anymore until a later date. But general rule of thumb, if it's close and it's clean, this is like one of the good examples on why using correlating markets is a good thing, or the closely correlating markets. Because if you only use NASDAQ, for example, if we only use, actually, let's better example on S&P. If we only use S&P, if we only trade S&P, we never looked at the NASDAQ, we'd never see this momentary hesitation on the NAS at 931. At 931, we'd just see like strong bullishness. We'd think, oh, it could be a raid and maybe it's time to short. Maybe you're not looking for that shift. Maybe you're just looking to short after a raid. But if you look at NASDAQ, you would have seen that it created a relative equal high. Oh, like it's not done pumping. It's generated liquidity. It's not done pumping. So just with that in mind, it's going to stop us from shorting the S&P at 931. And then on the Dow at, when did it reach that high? At 931 as well, 933. We have this equal high. We're not going to want to short with equal highs. But on the S&P at 931, we don't have equal highs at 931. There's nothing there. So having that Dow and that NAS in the back of our minds prevents us from shorting at a bad price. Because when price on S&P is pumping and breaks through this area, it's not breaking anything. It's just breaking like some random swing highs, right? Like we don't care about these random swing highs. But it's not random on the other markets. It's a relative equal high. It's a relative equal high, right? Okay, so that's a good message. So now, same thing, but it's on the S&P. We've got relative equal highs, slightly steeper retracement. It's not steep at all, let's be honest. NASDAQ, Dow looks weaker. If we want to short, we're shorting the Dow. But this would be a good example, like if we look for a raid here, if we call this the raid, and we call this short-term shift the market structure shift, we have a tiny gap in here as our return area, right? We could use that as our return area. But if you're looking to be more selective with your trades, then shorting in this area when S&P still has equal highs is not selective. It's a setup. It could be an RMR setup, but it's not a selective one because you have conflicting objectives in a correlating market. If price dumps and just continues to dump, you have to ask yourself, where's it dumping to? It's not like, obviously we can tell it's dumping, everyone can tell it's dumping, but where is it dumping to? Then you can take one extra step, zoom out, see some clean equal lows. Yep, that's where it's dumping to. Is it likely to just dump into this gap or this order block just to pump? Probably not. It's more likely to see the liquidity. Price likes to go towards liquidity. That's the priority. Before any gap, before any order block, first time of day, time of price, whether it's a news event, equity open, and then liquidity. Okay, I think and those are my thoughts. So for example, if you had a trade set up, let's say S&P, those highs were taken, excellent. And on the Dow, we actually managed to reach that gap during that raid. So we have a very clean setup in here. If we really love this setup and we want to enter around this price, what I'd be doing now is I'd be measuring my stop, 42 points. I'd put that into my calculator. Let me do an example. And here we go. So for example, if we had a 100k account, let's say we risk 2.5%, our stop loss 42 points, then our lot size on this specific broker, because all brokers have different, what's the word, margins, no, not margin size, contract sizes for indices, then your lot size is going to be different. So for this specific broker, my lot size will be 5.9. It's 5.95, round up, 6, whatever, 6 is fine. We'll do a sell limit, and we'll sell 6 as a limit right there. And if I'm tired, now I can go to sleep, put my stop loss at the top of that raid, put my take profit at those equal lows. But if I'm still awake, chances are I'm going to set an alarm, maybe at this gap, and I'm going to take a partial off there. But this is like the step, like you can see that these steps are taken much before the entry. The only confirmation is if we don't have that order there, we'd have an alarm in this area. So then we can do a very quick relative strength analysis just to confirm that the Dow is the weakest. Because if we want to short to those equal lows, we want to short the weakest of the three. But obviously NASDAQ higher high, what the hell? S&P slightly lower, it's going down a little bit, and Dow has gone down a bit more than a little bit. Like you can tell my technical terminology is not that proficient, but it doesn't need to be that so exact. Like NASDAQ, it's gone up, S&P gone down a bit, Dow it's gone down a bit more than a bit. It's good enough. Dow's the weakest. Let's short the Dow. Okay, yeah. So that's it. That's the relative strength analysis done. But just because it's weak now, it doesn't mean it'll be weak when price reaches there. But if you've set your limit at the weakest of the three. That's it. So you can see that the setup is, it's like ingrained in your head. So if I put in my journal, I'd put in like this as my journal entry, and I'd write a note on the side, and I'd take a little screenshot, Alt S, copy it, put it into my Discord chat, but I'm not going to put it into the community one. I'm pretty sure you guys realize that I don't post my setups in the Discord chat because that would be a signal. That would just 100% be a signal. But I don't want to do that. Actually, I could post that into the chat and then post a picture of S&P's equal highs and then do a poll saying, would you take this short on a Monday with no news? And see if you guys would vote yes or no. That would be a good idea. Maybe I'll do that. Maybe I'll do like question ones. Let me know if that's a good idea. Let me know in the chat. That seems like a great learning exercise actually. So now it's becoming very tempting for me. But anyways, let's have a look at some correlating markets. So let's look at gold. Anything interesting? These equal lows have been rated. Great. It's not very clean. It's okay. Nothing too interesting. Plat rated these highs. Nothing too interesting. Gold's much weaker. DXY. And finally VIX. If VIX fills its open gap, it needs to be bearish. There's a lot more bearishness to go. If there's a lot more bearishness to go on VIX, that means there's a lot more bullishness to go on indices. So if there's a lot more bullishness to go on indices, we don't want to rush so far. We don't want to rush too quickly into a short. Okay, I'm going to go back to the questions. I think that was a good little... Wow, I talked for 16 minutes straight, from 9:30 to 9:46. I think that was a good little snapshot of what my thoughts are in the first like few minutes of news. So that's like those are my thoughts during news as well. During news, during equity open. But it's clearer if I have like a bias that's more likely to be reached during a high volatility news event. That's why I wanted to save the stream for like a bigger event, because like this week, like there's no way, or very unlikely, that we stay within that range. Like one of these is getting broken. So if we picked one of these days, then Tuesday to Friday, that would be interesting. Anyways, back to the questions. I have no idea where I'm at. Oh. Tio, I'm gonna speed through these questions like I said before, but yeah, I'm sorry if the answer is very brief. I'm just gonna catch up. Tio says, priority to look for RMR between 8:30 and 9:30 only. Long story short, just after those times. So just after equity, but looking for objectives doesn't matter when you look for them, because it doesn't matter if it's 8:30 or 9:30. Like, it doesn't matter if the time's here or there or there. Your objective is most likely going to be there before 8:30 or 9:30. Like, this objective's there way before. The only times when your objectives form, like during those times, is, for example, the Dow over here. This was a good example. Like at 9:20 and 9 o'clock, equal lows were formed, and then 9:30 ticked. So then we could look for, if we really wanted to short and we don't have objectives above, we'd look for a bearish RMR. So we'd look for a raid, a shift, and then a return. And so if price, we go, we saw this as the raid, now we're looking for a shift. Oh, it doesn't shift, it doesn't shift. Okay, we don't have a trade. But like, we didn't lose here either. You see, we didn't reach our objective, we didn't reach our bias, but we didn't lose a trade either. So then we might be looking for a bearish RMR up here. So this would be the trade, as long as we don't have too many conflicting objectives above. But you know, we do have a conflicting objective above. Okay, next question. Vigo, I started watching the stream 10 minutes after it started. Now I woke up after 2 hours of sleeping. No, I made you fall asleep. No. I hope you could see the equity open with us. Good morning, Vigo. I hope you had a nice little power nap. Have I been streaming for 2 hours? Oh my goodness. Time flies. I said this in my previous stream, but time flies when you're having fun. Time flies when you're having fun. CB Hagen, thanks for the insight. Was missing trades and somehow getting confused when they ain't exactly in a kill zone, like the dead zone between London and New York. Yeah, London, New York, you got that London lunchtime. During lunchtime, it's a little more dead. Of course, this applies a bit more in Forex, but indices it applies as well. Maybe not here, but trying to zoom into somewhere random, but it didn't work. DJ, would also love to see losing trades, of course. Yep, losing trades are coming, I promise. I'm gonna take a scalp, and I'm gonna explain why scalping is lower probability. That way, it's gonna be a losing trade. DJ Dadala. Would I see objectives on daily volume gaps on the upside? I think you're talking about like that volume indicator. I've seen it before, but I don't use it. Unless, I don't know what you're talking about. Is it just like normal gaps? I don't have a specific word for it, I just call it gaps. Fair value gap, liquidity void, liquidity display. I don't care, I'm just calling it a gap. It's just a gap. Keep it simple. God damn it. Just keep it simple. Do I see objectives on daily gaps? I mean, the higher the time frame you go, whether it's liquidity from swings or liquidity voids from gaps, they become higher priority. So yeah, I do. but that doesn't mean I'm gonna be aiming for this daily gap. It just means I've kept it in mind for when price is close to that daily gap. But like I said before, liquidity is king. So instead of looking at that daily gap, my eyes are focused on that daily area of liquidity. If you're wondering why I labeled it S&P daily equal high, it's really an equal high, but on the S&P it's an equal high, just so I can have context. Same thing with this Nasdaq daily high and Dow daily low. Okay. Kasacha. Hello, Kasacha. Oh, MWFX. Dude, you jump straight to your question on partials? Oh, excellent. must mean it's an important topic for me to just jump onto it. 9:30 getting closer? Oh god, you guys asked those questions 20 minutes ago. Can I please do an analysis on EU? I'll do it. Sure. Sentiment's bearish. Sentiment's likely to be taken out. Find a likely time whether there's news, but there's no news for sentiment to be taken out. Find correlating objectives and find objectives on your market. Do you see anything below that's very likely or looks very clean? Do you see it on a correlating market? Use relative strength on EG. Does EG look like it's going to be more bearish or bullish? If it's bearish, then you want to short euro and not the pound. But if it looks bullish, you want to short the pound and not the euro. That's your quick analysis. And then you can use as many correlating markets as you like. Go to Anthony. Am I interested to trade live on a live stream every day with a VIP group? Oh my god, man. That sounds like a lot of work. I'll give you a little snapshot of how I trade. So, wait, let me, I don't wanna, but I have a few monitors, right? This is one of my monitors, but one monitor I have trading view, and on the other monitor, I've got my broker and stuff there, but my broker is never up unless I'm placing a trade. So all I do on my other broker, on my other monitor, is watch videos, watch movies, play some games, talk to friends. That's all I do. And then trading views like the chart with just my analysis. But I don't think I want to spend all my time like this live stream, because I think if I'm in a VIP group, I'm gonna have to do something like this live stream, just talking through my thoughts and my analysis. Oh my god, I just want to like find a setup, set an alert, go talk to my friends. Once the alert goes off, place that order, and that's it. I don't think I'm the type of person to do that type of stuff. Maybe if I need to sell out, then I'll do it. Every day. Like a daily fee just to enter the VIP room. Guaranteed 1 signal per day. Oh my god. Would you guys join? Oh. Yeah, doesn't sound like me, because I like to focus on helping you learn how to trade instead of signal style stuff. But maybe, Anthony, might be something in the future, who knows. Kasacha, what's my bias for today? My bias for today on Nasdaq is to not trade. However, if my bias was to trade, then I'd be aiming for these lows on the Dow. These ones here. So if I'm bearish on the Dow, I'm bearish on the Nasdaq until those lows are taken. And because we know that the Dow is much weaker, on the Nasdaq it's less likely to have such a deep dump because it's stronger. But we also have to keep in mind we have some equal highs on the S&P. So these are correlating, conflicting objectives, I mean, if you're looking to short. So Goldilocks scenario would be break those lows, form some sort of clean RMR setup, and place your long, and take off your partials and your objectives at this high over here. And once you get your entry, you want to find which one is the strongest. Nasdaq is currently the strongest, so most likely Nasdaq will be that strongest. Have your long and take off partials at logical areas and do a timed objective. So set an alert on the S&P. When that alert goes off, you can type something like that. S&P's reach, take partial off Nas. So that's my bias. What's next? Marshpedia, Nas moving crazily. Is it? Let's have a look. You mean this little retracement sort of thing? I guess. I wouldn't say it's crazy, but it's moving. Trading blob. Look at the 30-minute on the S&P. There is a bearish order block that we're inside of. This large bearish order block, I would say we were inside it quite deeply. No pun, it's not a pun anyway, but no pun intended. Like order blocks are generally most sensitive at the bottom end of the order block, and the bulk of the volume is in the mid range of the order block. When order blocks are not disrespected, but reach to such a degree where it generates more liquidity, then I would start to look not just for a reaction bearish, but for a reason to be bullish, to take out that liquidity. Because most of our judgments is all based on liquidity. Because order blocks you can find everywhere, because not everything's an order block. Like we could say that, oh, this is a bullish order block, but why does, if we place along there, why does it fail? Like order blocks are everywhere. Like this could be a bearish order block here, this one, but why does this fail? So order blocks are everywhere, but in order to frame context and to frame a story around why it's happening, then you start to see things like with a bias. So if you've got equal highs, instead of seeing all these bearish order blocks, you start to see maybe bullish order blocks. Maybe this would be more likely to have a reaction from, to be bullish. But like we said, Dow got equal lows, so we're not going to be bullish until Dow's lows are broken. We're not going to be bearish until S&P highs are broken. This is like I said before, it's a good example of conflicting objectives in correlating markets, which makes it a lower probability environment. So depending on how selective you are, you can choose if you want to participate or not. Because if you're not too selective, you'd probably be okay with placing a long here. Like this would be a clean RMR setup, like raid, shift, return, but you've got lows down here, so it's not likely to occur. It can, but it's just, in my eyes, it's not a highly selective idea. It would be an idea that I'd like to journal on to see if it would be a successful trade or not, but it's not a trade that I'm willing to allocate risk on. Hope that makes sense. Why Nasdaq not dumping? Nasdaq is dumping, it is just dumping less than the S&P and the Dow because of relative strength. If you want to know exactly why, I'm gonna have to say individual stock performances. Like Dow top 30 and it's dumping, so the top 30 are doing bad at the moment, and Nasdaq top 100 is doing really well, but S&P is doing in the middle. So that tells me probably the 30th to the 100th placing stock on the Nasdaq market is doing really well. So then if I was a stock trader, I'd probably look at the stocks from, or the companies from number 30th to number 100 and find the strongest of those. And then if I'm a scalper or a day trader on a stock chart, I'd be trading that stock particularly. And then I'd look for news for those specific companies. Maybe, I don't know, what the hell are the top 70th stock market? Airbnb, right? Maybe Airbnb is like a top stock or whatever. Then I'd be looking to long Airbnb for that day. We're getting a bit in depth here, but yeah. Long story short, it's relative strength. It's just a bit stronger. Okay. Dominic says, does going to sleep with a trade on stress me out? What if sentiment changed during my trade while I sleep? This is a great question. Sentiment doesn't change, but actually it does. I think what my mind was jumping to is relative strength. So relative strength does change over a period of time. So just because Dow is weak at the moment doesn't mean it's going to be weak in the next minute. Doesn't mean it's going to be weak in the next 10 minutes. Who knows? But going to sleep, I don't think it's a factor anymore, because I think the more you do this, you'll just start to detach yourself more emotionally than you were. Because if I go to sleep stressed, it's probably because I'm still emotionally attached to my position. Yeah, so if you just work on becoming less emotionally attached, then there's no reason to stress. Especially if you've accepted the risk and you've got your limits set and you don't have a high impact news event coming up whilst you're sleeping, then you should be okay. But if there's like a high impact news event and I'm going to sleep a minute before and I've got a trade on right before as well, yeah, I'm gonna be stressed as hell. That's why I don't have trades open before news. To avoid that stress. To avoid the stress, first of all, and to avoid the probabilities of being completely destroyed. Yeah. Have I ever taken a continuation pattern, says Fen. I'm not too sure what you mean by continuation pattern, but what my mind is jumping to is if price is continuously in one direction, chances are there are always retracements, and any of these retracements, as long as they're within a discount, so under 50%, so under that green line, then that could be an opportunity to enter this continuation. So I'm sure I've definitely taken trades that follow a continuation pattern, but yeah, this is what my mind jumped to. I'm not sure if that's what you mean, but yeah. Go to Anthony. Am I interested to trade live on a live stream? Didn't I answer this? I swear you said this before. You said this before. You're pranking me. I'm moving on to the next one. Deepak, check GBP USD. I don't think I'm going to just check things too often because it takes too much time. But if you have an idea, you can say your idea and I'll check your idea. Itchy Cornhole. Excellent name. Do I ever use the volume profile visible range for an added visual of the liquidity zones? Is that an indicator? I'm not sure. Can you find the indicator name for me and I'll just put it on? I'm just not sure what it is. Volume profile. Like this? What is it? Alright. What am I clicking here? Oh, what is that? The answer is no, I don't use it. But what does it show? The amount of volatility at a specific price location? Is that what it means? Like there's more people placing orders in this specific area? What is it based on? Is it just based on how long price spends in this certain area? What is it based on? What's the source code? How is it? What? How do I find the source code? Or is it actually based on volume? but no, I don't use it. Yeah, I haven't spent enough time with it. I'm sure there are ways to use it to find success, but my opinion on finding where volume is within the sessions. Wait, that's a good example. Let me turn that indicator on. I'm not sure if this is the one you're using, but let's just say most of the volume is being traded at this area. I'm pretty sure it's just based on how long price is at that area, because you can see that Asian session, start of London session, it's just overlapping a lot. But we know that an Asian session is not much volume, there's not much volatility. So that doesn't really make, maybe this is just a coincidence. Yeah, this is just a coincidence, I'm pretty sure then. This one. I think this is just based on how much time price is spent in that area. And because it's the Asian session, it thinks most of the volume is placed here. But we know most of the volume is during London and New York. So this area would have the highest volume. Because wouldn't you argue that this price over here versus like this price over here should have, this one over here should have much more volume, but you can see it thinks the Asian has much more volume. So it's a bit off, because it's not measuring volume, it's measuring time spent at a price. I think that's my initial opinion. I know nothing about this indicator, but that's my initial opinion. Yeah. Like we know when volume's gonna occur, we know when volatility is increased, and we know when objectives are more likely to be reached. It's during session time, near news events, near equity open. That's good enough for me. Next question. Benjamin, volume imbalances are gaps where price jumps. Yes, like this volume imbalance is when price jumped and left a complete area of a body with no wicks inside. There are many words and there are many intricacies that determine and differentiate volume imbalances, liquidity gaps, liquidity voids, etc., vacuum blocks and market open gaps, etc. But I just call things a gap. Yeah. They're just a bunch of ICT terms that he has many reasonings for, because he's probably had lots of experiences with those and noticed how different each different type of gap reacts and gave them different names. Next we have a question from I'm so lost. Oh my god, I'm so far off. I need to answer quickly. I can never answer quickly. I say I will, and then when I read the next question, I just answer too much. Watch, I'm gonna answer very quickly the next question. Where's the next one? Looks like Dow and Nat hit it already. Nasdaq, Dow hasn't hit that equal low yet, or the return. Anirudh Dutt says, Sir, okay, yes. Which time frame should we focus on as a scalper or intraday trader? You should focus on lower time frames, so the 1 to the 15, but if something is very close, you should focus on that. So if it's a higher time frame chart, like a 2-hour chart, if there are some really clean areas that are close by on a 2-hour chart or a daily chart, there's something really close, then you should look at that. But generally, if you're a scalper, 1-minute chart, that's enough. Malik, hello Malik. We understood RMR but confused with objectives. Make more videos on objectives. Yes Malik, I will do more objectives. I will do more videos on objectives. G says, thank you for that CFD explanation. I'm beginning to love you. G, I'm sorry to tell you, but I am officially taken. I do have a missus, so but yep, you're very welcome for the explanation. Infora, you are not referring to the IPTA of 60-40-20D. Is that like the daily, what is it? Daily dealing ranges of like the days ranges? No, I don't think so. J Quinn, please do more of these, mate. So helpful. I'll think about it, J Quinn. I'll think about it. I'm having fun so far, so most likely I will be doing another one. Man City says, multiple fair value gaps on US 30, which one would I use for a short? Good question. This is very specific. I really like this question. First of all, if we don't have anything else in mind, let's just look at the Dow. Where would I short? I'm a very optimistic trader, so I like to wait for a really good price. So let's look at our options first. We have a gap over here, and we've actually retraced into part of the gap, so it's become a shortened gap now. We also have a gap up here, and we also have a gap up here. Okay, let's look away from gaps, and now let's look for order blocks. So we have a block over here. We have one up here. Oh, Jesus. Okay, so these are our options. And now let's do a fib. So we have a fib from this swing, and we can have a fib from this swing. So these are all of our options in my eyes. So where could we enter? We have a big area in here we can enter in here, and we can enter in here. So which one, oh Jesus. So which one would I pick? I'm pretty sure you already know. I'm gonna pick this one. I want the best price. I want a good price, a really good price. I'm not in a rush to trade. It's a Monday as well. I'm not expecting too much. The best price. Of course, you don't have to wait for that price. You can wait for a lower price if you're okay with it. You can wait for this price. This would be a good median. Well, let's have a look at the risk to reward and the return that we'd get. Okay, so this first example, where would we place our stop? If we placed our stop, let's say at this swing high over here, we'd have to accept that our stop loss is not in an area of validate. That's not the word. What am I saying? This is not an, wait, I was trying to make it serious. This is not an area of, is it invalidation? Yes, that's the word. This is not an area of invalidation of the trade. So that means if price breaks your stop loss, it doesn't mean that this short trade idea is wrong. It doesn't mean this trade idea is wrong, because price can very easily pump to here, continue pumping to here before dumping. So the area of invalidation would be up here at this swing high, because if price breaks this swing high or gets close to it to create an equal high, then it would be likely for the trade to fail. So this would be an area that your trade becomes invalidated. But chances are you don't really want to have such a fat stop loss, because your target is only 90 points away. So this is going to be a 0.9R trade. Of course you can take it. 0.9R is not bad, but it's not what I'm looking for. And if you had a shorter stop loss, it'd be a much better risk to reward ratio, but you'd have to come to terms with not being your stop loss in an invalidation area. Okay, next example. So this one would have been like 0.9R if we set our stop at the area of invalidation. If we had our position here, we'd have 2R. And if we had our position here, we'd have 4R. So we're risking the same thing. So if you're here, let's say your lot size is 10 to have this stop loss to risk 1%. But if your position's here, you can have a 20 lot size. You can have a fat lot size, but you're still risking 1%. But if you're here, you can have a 40 lot size, you can have a huge lot size, but you're still only risking 1%. So your reward, instead of what you'd risk over here to gain 1%, a 1 to 1, you can gain a 1 to 2, a 1 to 4, and with a high RR, you have the luxury of not completely destroying your profits when you take partials. So like if you take a partial, you're not going to completely destroy your position because you still have a lot running. But if you have like a low position down here, there's not really any point to take a partial so close because you're just going to completely destroy your original position. Yeah, I hope that made. This is actually a great lesson. I probably should have made a video on this, but I hope you guys took something valuable there. But yeah, different optimistic entries, same risk, you can get much better return just for being a little bit more patient. The downside is price is less likely to go so high. It's more likely to just go to the objective. So you have to be okay with that as well. All right, I did not answer that question quickly, but I think it was important, so yep. Okay, next question. AZ, wait a second, I'm AZ. Y'all like this stream or else? JK, I like the stream though. Thanks for liking the stream, AZ. Kasacha, what do I think about trading in December? I want to take a challenge, but people tell me the end of the year is no good. I think you need to spend some more time. I think this would be a great year or great month for you to just explore why people think it's not a good year. If taking a challenge is not the biggest drain on you in any way, then take it. Take the challenge and monitor how price acts during this month. And because everyone's strategy is different, we all see different things. Even with the same strategy, we see it differently. So find out what you think of December, and then you'll have a baseline idea of what to expect in December's. Personally, for me, like I hear lots of people talking about this is the time where all the seasonalities change and it's not the best time to trade, and it's why we want to spend more time with family, etc. Might as well. Like we see these posts on ICT's Twitter, like he's not trading anymore. But for me, I've been trading these past Decembers and I've noticed it's quite similar. I haven't noticed anything ridiculously out of the ordinary. As a day trader, like we're just hunting short-term liquidity, like liquidity that's been generated during the day or during the previous week. Like we're not looking for huge moves. So yeah, for me it's not a big deal. Doesn't really matter. Jaquin, my trading psychology seems really spot on. Any books, videos I can recommend? Thank you, Jaquin. I really try to emphasize the importance of emotional maturity when it comes to trading. Books, I'm not much of a reader. I actually suck at reading. My attention span when it comes to reading is terrible. But when it comes to videos and quotes in videos, that's probably something that I can really digest. There are like some books that I have heard of that are really helpful. I'm gonna have to think about it after the stream and I'll message you, but a lot of them are by Larry Williams. Yeah, maybe look up Larry Williams and find his most popular books. I think those have been really helpful to a lot of people. Maybe the Bible? Okay, anyways. I'm not sure how sensitive I want to keep this stream. Grecos, or go to sleep for 5 minutes and put an alarm for after the event price action. Very clever. I put an alarm for 3 minutes before the event, just so I have a bit of time to remind myself. Which one is weaker? Nasdaq, S&P, Dow. Nasdaq. If you pick Nasdaq, you're correct. Nasdaq is weaker. So if we want to short, we want to short Nasdaq. And what are we aiming for? Those lows down here. And is it likely to have a reversal to be bullish? It's hard to tell if it's going to reverse unless you have reason to be bullish. But yes, we have reason to be bullish. These equal highs on the S&P. So when those lows on the Dow are taken, we could look for a bullish RMR pattern to target those highs. And it is a Monday with not much news at all, so it's reasonable to anticipate a very ranging inside day. Okay, next question. Janeth Pereira smiles. Smile back at you. Yo Marsh, Lakmio, watching only for your trade. I like your video, I'm from India, nothing to do with Nasdaq. Hello from India, hello from Australia, Lakmio. Happy to have you here. Marsh, you caught a quick scalp in Nasdaq. Very good, Marsh. Was it a good trade? Did it follow your plan? Did you risk what you planned to risk? If yes, well done. Excellent. MKLZ, relative strength question. Both Dow and Nas broke the high on the hour, but not S&P. This is a great question. I think I covered it in this stream, but it depends on how long your trades are. So on like a higher time frame, you might see that one of them is stronger or weaker than the other. Like here, Nasdaq making higher lows, S&P making slightly higher lows and a lower low down here, and the Dow made equal lows. So the Dow should be the weakest on this higher time frame, but we just saw on the 1 minute chart, the Nasdaq is actually weaker. So this relative strength thing is based on like the type of trader you are. So if I'm a scalper, if Nasdaq is weakest now, I'd want to short the Nasdaq if I had a trade set up in here. But if I was like a swing trader looking at 1 hour swings, then Nasdaq is the strongest because of those higher lows. Then I'd want to long the Nasdaq because it's in a higher time frame. I hope that answered you. It's a interesting topic, but yeah, relative strength shifts between different time frames based on what is important to your trading. Jaquin, volume profile 0, you can select fixed ranged volume profile where the long and short buttons are found. I'm not too sure what you mean. I'm just gonna move on. Sorry, Jaquin. Go to Anthony. I thought the question was gone, that's why I put... no, it's all good. Don't worry about it. Ichi Cornhole. Volume profile is buy level indicator. I'm not too sure what you mean. Buy level indicator. So when it goes into a very high volume area, it's a buy. If that's what you mean, I kind of get it, but what's to say that there's a lot of volume because there's a lot of shorts? What's the difference? So it's not the most, not something that I would give the chance to explore. But I'm sure if I gave the chance to it and find out when it works and when it doesn't work, then yeah, I could find something, but yeah, not something that I'd give the chance to. Price traded mostly in that area? Yep. David, it's like volume but not based on time but rather on price. Yes. Yeah, I get what you mean. I think I was saying time as in how much, not the x-axis time, but how much time it's spent in that price. Like, it spent an hour in that area, like that. But yeah, I get what you mean. Have I checked the DR, IDR? Daily range, intraday, is that intradaily range? I'm not too sure what those acronyms are. Like what it is so far, like 144. And then Friday, like 150. Is that what you mean? Like checking the daily range, like how much it, I'm not too sure what you mean, but not the biggest importance to me. Itchy cornhole. Think of volume as x-axis, okay? And volume profile. What the hell is volume profile as y-axis? Oh, yeah, I know what you mean. Like the bar chart, like how it extends on the x-axis is more volume. Yeah, I get what you mean. Yeah. Fen. Because sometimes I realize the RMR pattern is trying to look for an entry to the opposite side of a bias after taking the liquidity. I get what you mean, but the way you should be thinking about it is if you have that bias, let's say this is the bias down here, these lows, then you want to look for an RMR, like a raid in the opposite direction, that RMR is in the direction of your bias. You don't want to wait for your bias to be taken and then look for an RMR afterwards. Because what are you aiming for? Are you aiming for this random swing high, this single swing high? These single swing highs are just significant as this equal low. This was your original bias, so we want to aim for that area. We don't want to predict a reaction off that area. We want to be aiming for that area, and then if we have a position on, we leave a partial, and then we just let the partial run. But we don't want to be predicting like that. Reason to, which we have reason to on the S&P. Go to Anthony. I want to learn everything to be a great trader. I would never prank you. No, we could be good buddies and I'm sure you'd still prank me. I don't mind a little prank here and there. Ichi, the volume profile shows where your liquidity zones are at. I will post charts of it in Discord. Yes, that would be very helpful. Thank you, Ichi. Lacmio, volume profile also helps determine to locate the thin spot within a fair value gap. I suppose so, but honestly, fair value gaps are really easy to see once you get the hang of it. Like it's everywhere. Like it's pretty obvious it's here, right? It's pretty obvious it's here. It's just a long body with no wicks attached. It just becomes natural to look at almost, right? We don't need a volume imbalance, volume indicator. Plus the volume indicator won't really show this gap, I'm sure. It's a bit too intricate. It's a bit too lower time frame to see. So I tend to like to stick with price, because when you look at price, that's all you need. In generic terms, that's all you need. It's like if you gave someone a choice, do you want to only see price to trade, or do you only want to see your volume imbalance to trade, your volume indicator? Of course you're going to pick price, because price can see everything. Almost everything. Go to Anthony, I'm so grateful. Oh, I'm grateful for all of you coming in and supporting the stream. I've had a lot of fun, even though we've been streaming for I don't even know how long anymore. But I'm having a lot of fun catching up with your questions. I'm not sure when I'll end the stream. I'll probably end it soonish once I catch up with the questions. That's not a hint to ask more questions. That's just me saying I'm getting kind of tired. You just got to keep in mind it's almost 2 o'clock in the morning here, And tomorrow, do I have anything to do I guess I don't have anything to do tomorrow, so I can just sleep in. That's not the point though. I still want to go to bed. Okay. Samuel, I'm finding that I'm missing a lot of trades waiting on a larger discount or premium. Is that price necessary on smaller time frames, or just take trades at the return gap? It's definitely not necessary, but it just gets you a better price. So if you're very selective and you're okay with being patient for a better price, then wait. But if it's okay with you getting a slightly worse price with a slightly bigger stop, then that's fine. It's a very personal question, so whatever you find is okay is okay for you. Marshpedia, goodbye. Thanks for the stream. You're very welcome, Marsh. Thank you for dropping by and asking plenty of questions. Benjamin, I was referring to someone else's question about price imbalance, like not fair value gap, but volume imbalance, two different gap. Okay. Shreyas, Judas swing. Yes, what about this Judas swing? There are Judas swings everywhere. It's just a different name for a fake, a manipulation. Like I could say that's a Judas swing, I could say that's a Judas swing, Judas swing, Judas swing, Judas, 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 right? Swing. Derek, AZ, your legend, hope I'm doing well. Derek, your legend, I'm doing well, thanks for dropping by. DJ, Benjamin, this is right. Sergio considers the 50% equilibrium. Yes, I consider the 50% equilibrium. That's how we determine whether price has retraced into a discount or not. So here, above that 50%, we've retraced into a premium, so it's a fair price. But in the greater scheme, in the greater swing, we have not. We have over here, so we could argue once we retraced into a premium, we had no need to retrace into a premium again. But yeah, definitely we do keep that area in mind. One dot dude. I remember you, one dot dude. Tell us more about invalidation area. Normally, are you always patiently taking the best price during London and New York kill zone? I usually always wait for a great price. I usually won't take an entry like this unless I really want to take part into that continuation to that really key area, and there's not many conflicting objectives above. So if it's not like a continuation trade, yeah, I usually always wait for a really great price. Jaquin, yes. Amine says patience is key. Yes, 100%. If patience was not key, we'd just be taking trades left, right, and center. We'd be 10-second scalpers, and we'd just be very stressful doing it. Unless we're robots, then we won't be very stressed. But usually when we go to the lower time frames, then there's just all these emotions bottled up into a short period of time, which can be pretty difficult to deal with for some people. That's why we have lots of investors. Like the complete opposite of scalping, we have investing. What are you going to invest in? Maybe a long-term ETF like NASDAQ, or a leveraged ETF like TQQQ, right? Like a 3 times return compared to the NASDAQ, right? We're down 70%, so if just on a recovery we earn 300%, like we invest in this, we have a long-term outlook, we don't have a stop loss because we're investing, we take out our profits 40 years, 20 years, whatever, down the track, we're gonna be up a lot, right? Like there's not much emotional burden in this. But the lower the time frame you go, the more emotional sabotage takes place. Like just because we're in a recession, right? We're not, like if we placed a long in 2020, God forbid, 2022 and we're investing, oh my god. But even if we're down 70-80%, we're not including a stop loss. We're not getting out of the trade. This is our investment. We have a long-term outlook. So even though this is happening, we're not getting out early. We're not inviting emotional sabotage. Next question is, tell us more about invalid... Oh, Naps. Nap says, how long did it take for me to become consistently profitable? What was the main aha moment that turned my trading around? The aha moment was psychology and risk management, 100%. How long did it take? This was, I got pranked during my first year of trading because I got funded in my first year without risk management. I'm sure you know how that's going to turn out. Like, I think I'm the top of the moon, passed the funded challenge, I've made it, right? I'm consistently profitable just because I passed. Obviously not, right? Long story short, blew it up and realized what the hell's going on. I thought I was consistently profitable, but that was sort of like a blessing in disguise. Having passed the challenge without proper risk management and good psychology, I really had to think about what's going on, what's happening. I really had to reflect deeper into what's going on. And it wasn't my trading strategy, it was just my management. Because I noticed even back then my selectivity was decent and my win rate was pretty good. My RR wasn't that great because I took off my partials quite early and I took off a lot quite early, so I wouldn't give my trade room to move for my profits to run. So that part of psychology was turned around once things became more rule-based. But I thought I had to think to myself, if I gave a robot all the knowledge that I have currently about technical analysis, about fundamental analysis, that's it. I gave a robot about that all I know about trading, nothing about emotions or psychology. Would that robot be able to be consistently profitable with the knowledge that I have currently? And I thought to myself, yeah, of course. If I was a robot, or if that robot knew everything I knew and managed risk like a robot, yeah, that robot would be consistently profitable for sure. I think it'd do excellent. And so I thought to myself, what's stopping me from becoming consistently profitable then? It's not my strategy. It's my psychology. It's my risk management. Not only how I manage my losses, but also how I manage my winners. So that just instructed me to really prioritize that part of my trading. And then ways that I help myself become more emotionally controlled and less active on emotions is making these exercises for myself. And I've shared a few of these exercises. I think you know one of them is like the partial detachment exercise. These aren't just random ones, these are ones that I found were really helpful for myself and I think could be really helpful for others. If you don't know what I'm talking about, it's like if you have a trade and let's say we've got 10 lots active. It just means, let's say we usually, when we reach our final objective, let's say this is our final objective, if price reaches there, instead of taking off whatever we have left, instead of taking off 10, how much are you comfortable taking off and letting run? Like, are we comfortable taking off 9? And so we just let 1% or 10% run. So we let one lot just run with our stop loss at break even. Like, if you see this little bit of profit go up, are you not emotionally inclined to just pocket it and to take profit straight away? And then to find at what point are we able to be emotionally detached? Or if we reach this final objective, what if we only take off 2? And so we're leaving 8 just continue. So this really helped me know at what point I can be emotionally detached. Because when I first started, oh my god, it was ridiculous. It was like first partial, maybe here, let's take off 9. Now when I look back, that's ridiculous. We've just destroyed our entire position size without reaching our main objective. This was our main objective, and we're taking off everything at like some little minor objective. It doesn't make sense. But this wasn't a rule to take off the majority. It was it was an emotional decision. It was, we see price go up here, we look at our little profit balance, we see it go up, and we just take off 9. It's not a rule, we just decided to do it. Rules like at the end we're happy to let 10% run, and before then I'm happy to take off maybe 30% each partial. So if I take off 30 here, and at the end I take off 60, I leave 10% to run, and I'm happy to let 10% run to the end of the day, to maybe 12 o'clock. Like, this is a very hard rule-based system. 30 there, 60 there, 10% run, stop break even until 12. You give that to a robot's gonna do it. You give that to a human, you don't know what's gonna happen. Maybe they'll take off everything, like here. Maybe they'll take off everything here. Who knows, right? But without these rules, we're open to these emotional moments of sabotage. That's why so my aha moment was noticing what I need to improve on, which was psychology, risk management, and profit management. And what fixed it was not just noticing it, but laying out rules to fix it. I wouldn't say it's easy, but it's easy to know what we're lacking in, but it's very easy to not do anything about it and to just look over it, look past it. So that's the main take-home message, is if you notice what's going on and you know that you can fix it by implementing some sort of rule, then what's stopping you? And if you continue to let it stop you, you're only just delaying what you already deserve. Because chances are, if you're a trader, you've been practicing for ages, man. Like, you really want this, like you're trying really hard to get it, but you know what's stopping you. Don't let yourself have that disservice of not letting you achieve what you achieve. Okay, anyways, that's a bit of a tangent. Murtaza, next question. That was a good question, Naps. Murtaza says, if price comes into my fair value gap today, what do I look for to enter or engage? I'm not sure which market you're referring to. If you're referring to the Dow, if the Dow retraces into the gap, I'm looking for if S&P is close to these equal highs. If they're taken, great. But if they're not, I'd be looking at, if I want to short, looking at the weakest, trying to find which one is the weakest, and I'll place a trade on that one. I'm not going to do it because there's conflicting objectives at the moment, but that's what would be going through my mind. Eddie, do I only take trades during kill zone times? Yep, most likely. During London, during New York, very unlikely during PM, but sometimes. Asian session, pretty much never, because I'm never on the computer during Asian session. So yeah, mostly London to New York. Oh my, gold took out. I like your name. Your name starts with oh my. Oh my, gold took out fat equal. It did? Fat equal lows. I'm telling you. Now, if we do a little back testing, before those lows were taken, did we have an RMR present? Oh, replay function. Replay function. Let's go. Replay function. 1 minute. Okay, we've raided and we've reached a key area, which is a gap on the left-hand side. We're waiting for a short-term swing low to break. I've figured out there's a play button, so I don't... Oh my god, it's going so fast! So we've got a shift, we've got a return in here. So we can set a limit here, measure the stop, etc. Let's see what happens. This is a bit fast, actually. 3. Actually, it's a bit slow. 10's fine. Go. Go, go. There we go. That's our entry. We place our trade there with our stop loss. Oh my god, that is a tight stop loss. 5 points? 7 points? Something like that. Do we get stopped? We get stopped. Okay. We get stopped on this one. Next trade. Next back test. What time is it? It's still London session. Okay, so we're still quite early. We have a shift here. This is our next shift. Okay, we have a gap up here. Let's have a look. We go on. Oh, Jesus, it's quiet. We have a less optimistic entry here. So if we're not waiting for the top one, we can wait for this one. What time is it? It's 6. It's still not New York session. Let's see what happens. Is that it? Is that it doesn't go to this one? Is that what happened? I can't remember. I think that's it. Yeah, so this would be the entry. Wait, let me get out. So we'd have one loss trade at this gap over here. Why would it be a losing trade? You could argue that on the left, I didn't look to the left. We had relative equal highs. So above, resting liquidity. So when we took that short over here, I was kind of rushing it, to be honest. I was a bit excited with the replay, but yep, this short could have been avoided if we saw those relative equal highs. So we have that losing trade, and then we have one over here where it retraces. Does it retrace into a fair price? Yes, it retraces just above 50%, giving us 3 opportunities to enter in the return area. However, it does not retrace into the optimistic, the best entry price. So if you're like me, you're going to miss this trade. But if you're not like me and you have your own framework where if a gap overlaps with a breaker block on the other side, and if that breaker block overlaps with a fib at 50%, that's your entry. You would have got this entry and you would have been rewarded very handsomely. With our key objective down here and partials along the way, perhaps at this gap down here, perhaps at this swing low here, and then we'd leave 10% to run at the end, to the end of the day. Who knows, maybe price is just gonna completely shit itself. Excellent. Okay. Oh, very good. So that's a way to backtest. You find a clean objective, and if you don't get to participate on the trade, find out when that objective is taken and have a look above if an RMR was presented or if an entry was presented. Okay. Sandro Bahusa. I've just landed here. Do I do daily streams? Welcome to the stream, Sandro. It's lovely to have you here. However, I do not do daily streams. I actually don't stream very regularly at all. But I do post videos quite often, a few times a week. And I do have a little Discord community, and if you ask questions in there, I'm usually there every day. I'm 16 hours ahead of you. I'm living ahead of you. What is it? So I'd be Tuesday. I'm living in Tuesday right now, and you're still chilling in Monday. Not fair. I want to live in Monday again. And then I can see this price action all over again. Lakmia, India stock all-time high. Excellent job, India. Well done. Fen, you're welcome for the lecture. Hope you can be more disciplined in 2023. You've got this, Fen. Discipline, follow rules. You got this. Samuel, thanks for my valuable time and explanation. Hope I reach 1 million. I'm not going to reach 1 million, Samuel. But thank you for the optimistic support. I really appreciate it. And may we have frequent live sessions with live tradings. We'll see, Samuel, we'll see. I can't be too frequent because you do know when I stream, I'm very focused on talking and answering you guys' questions and doing a little analysis. I don't really have the time to trade as well. and I don't have the time to watch videos, play games, talk to my friends. You guys are my friends, but different friends, if you know what I mean. I like you all equally. Have a good night, Fen. Hello, Bart. What's up? Florida. It's cool. I'm from Australia. Do I listen to super chill music? Oh god, I got lost. While trading alone or just for the stream? Just for the stream, J Quinn. If I'm listening to anything during trading, it's probably the video or movie that I'm watching. Yep. I think someone asked me last stream, what type of music do I listen to? And I same answer, but I'm not the type of person to listen to music, actually. I don't listen to much. US 30 is reaching key area of support, and area of support has been broken. So next key area in mind is this low. Let's see if we have hesitation or we just go through. But if we expect today to be quite the ranging day, we can expect some more bullishness. And if there's more bullishness, we can start to look for a bullish RMR pattern. Dude, when do I usually start my day setting up my trades, or is this always ongoing thing every time I'm at my, do I do multiple trades? Usually always one at a time. Sometimes I do have multiple trades. It really is case by case. Sometimes I like to place trades on multiple indices because they're quite similar, but it'll always be leaned towards which one's strongest or weakest. But you have to keep in mind, you don't want to be placing trades with the same idea on too many of the same markets, because if your idea is wrong, all of your trades are going to be wrong. So you really have to know how much risk you're allocating per position, if it's even worth splitting your risk allocation in different markets. So for example, do I want to allocate 100% of my risk, not 100% of my account, just 100% of my risk onto NASDAQ? Or do I want to allocate 50% of my risk to NASDAQ and 50% of my risk to S&P, because they both seem like they're likely to be reaching a key area that are both quite far or something like that. That's a decision you have to make. Most of the time I just stick with one because it's just simpler, it's just easier, and it's not necessary to place trades on multiple markets, but it is something to be aware of at least. Oh, and you also asked, when do I usually start my day trading setup? When I go on my computer, it's probably mid-London session. I look at my charts, I find areas that are interesting to me, and I mark them out in lines, and then I set an alarm at like 9:30. I just go back and, because my chart's on my other monitor, I just flick back and forth, like looking at my monitor to see if anything interesting is happening. If nothing's happening, then I just continue doing whatever I'm doing on my main monitor. Most likely it's unproductive. It's not making content for you guys, unfortunately. I do that in the morning. Actually, when do I wake up? I wake up at like 12, so that's around, oh yeah, that's around here. So that gives me time before London session. I usually make my video around here when I wake up. But yeah, I'm not staring at my charts and looking at price action because it's boring, right? Maybe not boring, but like if we had a setup like this bearish setup on the Dow, like we just set our return area, we'd set our alarm, And there'd be no need for us to just stare at the chart, right? Waiting for it to go. Like, we just set our alarm. Once it goes off, we know what to do. That's more what trading looks like for me. Just taking the time to find this specific area is the part that takes time. That's the analysis time. And even that gets shorter and shorter once you get better. Or depending on your trading style, maybe your trading style requires a lot of time for analysis because you need to look at a lot of things. Maybe you're only looking at gaps. You're not looking at anything else. Even then, you just find a gap, you set an alert, and that's it. Just move on to whatever you want to do. Karen, wow, this is still running. Yeah, I think I need to stop soon. This is getting out of hand. I don't think I'm catching up to the question. You guys keep asking questions. What time is it? It's 2 a.m. Alright, you guys have 1 minute to ask whatever question you'd like, and after that 1 minute I'm gonna draw a line in the chat, and anything you ask after that line I'm not gonna answer, and I'll end the stream. Alright guys, you have 1 minute until 11 o'clock. That's fair. Alright, that's your question. I'm gonna have a drink of water. Might as well use this little thing. Okay, drinking water time. Alright guys, it's 11 o'clock. Enough questions. I think you've done very well. Just a friendly reminder to have a stretch, drink some water. When we're trading, time flies and we tend to forget our water intake. How's your posture? Are you a hunchback? Sit up. Better posture is good. Your elder self will thank you. My posture is not that great, so I try to actively remind myself, but anyways, let's get into the questions. A few more and then we'll end it at my line. Okay, we're up to DJ. I'm currently coding the armor. Oh, very impressive. Then it's actually going to be a robot trading it. Very good. Good luck. In for a chance. I've been negative for 2 weeks. What do you advise me to do? I would want to know how long you've been positive for. Are you still overall consistently profitable? Or did you just find a setup 2 weeks ago and you've had 2 negative weeks? It needs a little bit more context. Because if you've been profitable for 20 weeks and you've been negative for 2 weeks, that's great. Right. So, yep. But if that's not, I don't think that's the case. So if it's not, I would say to reevaluate your strategy, find things that you could do to make more selective ideas, and do a little reflection on how much emotional action are you putting into your trades? Or are you not? Are you very good at following your rules? Is it just your setup that's really bad? So do a little bit of reflecting on that. One dot dude, how do you have those confidence that the run will continue to wipe buy side and sell side liquidity? Confidence through experience. I've seen it happen too many times. I know what's considered very, very clean, what's very likely. So if you had a trade set up and your final objective was these equal highs up here, if price is pumping, like we're not thinking that price is just going to reverse from this random area. Yeah, sure, there's a gap here, sure, there's an order block here, whatever, but we're not thinking that it's just going to reverse here. We've identified that there's a clean area of liquidity, so price is more likely to just pump, because we've seen this happen so many times. Like, you can just backtest it, just anywhere clean. Zoom back. Let's count to 3. 1, 2, 3. Jesus Christ. Okay, right here. Obviously, these really clean equal highs haven't been taken because they're the higher time frame ones. But even so, if I drew it like right at the tip, right there, like at the tip, like if we zoom across, you can see when price is starting to shift in a higher time frame, bullish RMR, right? Like raid, shift, return. Then when it starts to pump, it's not just pumping to some random location. It's got this area in mind from the very beginning. Like over here, it's got that area in mind. So when price reaches logical areas, you could say, like a gap, like liquidity over here, yeah, they're key areas, but its objective up here is what it's got in mind. So we're not expecting a complete reversal. We're expecting it's more likely to continue to that area. And what we saw was that area being raided, but very, very slightly, to the point where we could argue it's generated more liquidity. So now that area will be kept in mind once price is close, right? Because as a day trader, we're not holding trades from down here to up there. This is like a swing trade at least, right? This is a slightly longer term swing trade going for like a few months. So we're not looking to place trades like this to target those highs. Instead, as day traders, we wait for price to be semi-close, right? Find some sort of manipulation and find a shorter time frame RMR, like this, to take advantage of. That's what we try to do as day traders. Okay, let's go. Okay, next question. Steven, oh no, Fluffy Cube. Thanks for talking about this. This is exactly what I'm going through. Oh, I'm very happy I could talk about something that's relevant for you, Fluffy. Manny, I appreciate that talk. I'm there right now with psychology being the hardest part of my journey. Don't worry, Manny, it's the hardest part for everyone's journey. Well, obviously not everyone, but the majority of people's journey. If you get through this part, I promise you, I can't promise you, but I promise you, you will notice differences in your trading. That's very broad, actually. You'll notice a lot of improvements in your trading. You got this, Manny. You and Fluffy, you've got this. You two could become like little trading friends and hold yourself accountable. That was another thing that I was jealous of when I first started. I was jealous of those people, those traders that had someone so close to them to talk about trading with and to keep each other accountable for. Because with trading, everyone around me is different. They don't know what trading is, they don't want to get into it, etc. So I have no one to talk about it to, except myself. And the only one to hold myself responsible for my actions was myself. But if you have like such a close friend that you're happy to just be transparent and share everything with during your learning journey, I think that could be an extremely powerful tool. Because chances are, if you're like, hello friend, I'm going to do this, and I'm going to put my stop there, I'm going to put my take profits here and here and here, and then your friend's like, okay, you do that, and I want to see an update on your trade when it happens. Let me see how you manage it. Chances are you're much more likely to follow your plan so you can show your friend. But if you're just by yourself, there's just less reason to follow your rules other than to be self-responsible. Not everyone needs that other person to keep yourself accountable, but it can be a helpful tool. Luciana, did I miss the short on US30? Yes, I missed. This wasn't a trade idea for me anyway. This was an idea, but it wasn't a trade for me anyway. But we talked about the gaps and about how optimistic you could be. So we talked about how price retraced into this one, price retraced into this one, and there was a gap up here that you could have waited for. And on the fib, we could have waited for a deeper premium retracement. So if I was looking to take a trade here, I would have taken a trade in this area-ish, waiting for a retracement before I dump. So no, I didn't take any trade. Abu Bakr, when is swing low or swing high formed at what time? When is the swing low formed? Do you mean the raid? Like when does the raid's high or the raid's low form? Is that what you mean? There are likely times for those to form. That would just be during news events, during equity open, or if you want to be a bit more broad, during a kill zone time, so London Open or New York Open. But if you're just talking about when do swing highs and swing lows form, I have no idea. Whenever it wants. If price wants to be bullish, I have no idea when it's going to form these swing lows, right? Who knows? Lakmio, please make a video on breaker block. Lakmio, I don't think breaker block is that important, honestly. Like, stick with a gap and order block, easier to see, more sensitive, more important. Breaker block is not the most important. I think it's just a little buzzword. Like, of course you can find them, but wouldn't you rather just find a gap in an order block? It's enough. Like, how many entry methods do you need? Like, let's use for an example. Let's look at this one, for example. Just this entry right here. How would we enter on that? If we look at it, we could say that there's a very small gap in there. We could enter on a gap. There's an order block in here. We could enter an order block. There's a fib in a premium. It retraces to 79%, so it retraces into a premium. So already we have 3 ways to enter, 3 entry techniques. Do we need a 4th one? You can make so many, but is it necessary? Like, we can find a breaker block. Like, a breaker block is the opposite of like an order block. This is a bearish order block, so it's some bullish candles. So instead we want to find a bullish order block, but we have to look for it on the left. So if I look on the left, over here, we have bearish order block again. We look again, we have a bullish order block right here. Right, so this bullish order block that was disrespected became a breaker block. So you could say that this breaker block was retraced into before dumping. And then this breaker block, as we scroll through across, as price disrespected it, went back, retraced into the breaker block before dumping. Like, it's just an additional entry method. We don't need too many entry methods. Do you know what I mean? It's not necessary. And this one takes takes effort to find. The other ones are so easy to find. Like, gaps so easy to find, order blocks easy to find, fib is so easy to use. We don't need the breaker block. Okay, anyways. So very unlikely. I'm not going to make a video on breaker block. Yep. I might mention it, but I won't make a specific video on it. Marshpedia, 3 hours stream. AZ, hope you've taken some breakfast, lunch or dinner. I usually skip breakfast, so because I wake up like really late. So I have lunch, I have dinner. Actually, I usually have like a midnight snack, but I haven't had my midnight snack because I've just been streaming. Thank you for reminding me, Marsh. Daval. Hello, Mr. AZ. I'm Thawal. Oh, Thawal. I know you, Thawal, from India. Hello, hello. Abu Bakr, do I always wait for the midnight open, high or low, to be taken? Or do I look much further in time? I think always is always a rough word to use. I never really use always unless it's really specific, like I always don't have an order open a minute before CPI, NFP or FOMC. I never do that. So do I always wait for New York midnight open, high or low, to be taken? No, I don't. Daval, I'm watching all my videos twice. Thank you for the support, Daval. Take some notes, test it out yourself and see if it works for you. Hope it can help. Those lows have been taken. Did you see the hesitation? We've been talking about hesitation all tonight. I think I need a timestamp. But yeah, once again, hesitation before taking it out. Now could be a time to look for a bullish RMR. Which one's strongest? Have a quick look. Looks like Dow's weakest. S&P and Nas are slightly stronger. Nasdaq slightly lower low right now. S&P slightly lower low over here. Dow much lower low. And if we look at the lows on the Nasdaq, higher lows, is a bit harder to choose. So we look at the highs. So Nasdaq is the strongest, S&P is in the middle, and Dow is the weakest. So if we want a long, we want a long either Nasdaq or S&P. So we look for that shift. We have a raid, have a shift. It's a not very decisive shift. It's got an order block in here, but it's not very decisive. But this could be an entry opportunity. And if we did place a long there, we'd set our stop loss at the raid's low. How far is it? 15 points. So I'll get my little calculator. If it's a 15-point stop loss, here we go. Let's say we've got 100k, 2.5% risk, 15% stop. On this specific broker, we can place 16.6 lots. So if we set our limit, we'd set our limit at 16.6, and that'll risk 2.5% at this stop loss. And then our objective, we would time it. So we could take some at this gap, could take some at this swing high, but we time it for the S&P equal highs over here. So when this alarm goes off, that's when we'd be taking our partial off on the Nasdaq, our primary partial. Make sense? Because that's the key objective. That's what price is likely to be reaching for if we have a rangy day. And we are likely to have a rangy day. I'm just going to draw it on the S&P because we can see the objectives a bit clearer. Okay, next question. Where do we have? Dawit, What's my approach to fair value gaps which have been partially filled? Are they still valid, and do I consider them as good entry points? Yeah, I see nothing wrong with partially filled fair value gaps. So for example, this one over here, this would have been a gap all the way down to there, but once it's been partially filled, that's now the valid area over here. So if price was here and rejected and retraced into it, yeah, that's still a valid entry point. The only reason it would not become a valid entry point is if your objective, which was this low, has been reached. So if this low had been reached and then this gap was reached, that would not be valid anymore, because what are we aiming for? This low has already been taken. Yeah. Dawal. Now Indian index will perform RMR as all-time high and liquidity hunt. maybe. US 30 hitting SSL soon? Yep, we've reached that now. SSL reached. S&P swing low's been reached. Nasdaq, do we have an equal low formed? We have a low here. It's not, it's relative, but it's not close. So I'm not too scared of the liquidity down here. If price was a little bit closer like that, then I'd be a bit more scared. Amon, I'm from New Jersey. Hello there. Daval, please take care of myself and keep inspiring us. I hope so. I'll take care of myself, Daval, don't worry. Something ICT. What is my biggest takeaway from trading experience? Biggest takeaway? Do you mean like about trading specifically, or just about life? So if it's about life, I haven't really thought about my biggest takeaway, but the thing that popped up into my head immediately was just discipline. If you want something done, you have to be disciplined. You have to do things that you don't feel like doing if it's what you need to be, if it's what needs to be done. To learn to love doing things that you don't like doing. I kind of messed up that quote, but mainly discipline is the biggest takeaway. To do things that you don't feel like doing when you know you need to do them. Yep. And biggest takeaway when it comes to charts specifically, the importance of liquidity and just the concept of liquidity. Like if I had to choose one concept out of everything, if I have to choose order block versus gap versus correlating markets or relative strength, etc., I would choose liquidity is the biggest takeaway. Chief Chiller, what's up Chief Chiller? Was ICT my biggest source for learning? Yes, he was. I started with him a few weeks into my trading career, so very, very early on. And I gave him a chance to study what he was teaching, and yeah, didn't need to look for anything else. Something ICT. What is my biggest... Well, I think I answered that. Yep. Luciana, what trade did I take? I think I answered that as well. Didn't take a trade, but you know my thoughts from basically 8 o'clock to now. iSpace, what would I focus on after I learnt support and resistance and supply and demand? Like technical wise, I would, if I was to learn support and resistance, supply and demand, I would need to ensure that I have a set of rules that I can write on a piece of paper that a robot would be able to do. If I hand that piece of paper to anyone, they would be able to do exactly what I could do. So I'd make my trading very systematic, and I'd place an emphasis on managing losses and managing winners. So how to place the stop loss, where to place it, and why it's placed at a certain area. And same thing for winners. Why do I place partials at certain areas, and why do I take off certain amounts at certain areas? Because support and resistance, supply and demand. If you add one entry technique, like you reach an area of demand and you decide to short or buy with an entry technique, like a retracement, and you pair that with risk management, I'm pretty confident that you'd be able to do well. Because it's not the strategy that keeps us all from success in trading, it's usually always the management. Fong, hello Fong, when is my next live trading analysis? Honestly, I have no idea, but I'm going away for the next 2 weeks when December starts, just to spend some more time with the family. But sometime next year, early next year, I'm sure I'll have another live trading analysis. Itchy cornhole. I can see the end. 3 more questions. We're getting there. We're getting there. I'm sorry guys, I can't answer any more questions after I reach my line. But I hope you understand. Thank you. Itchy cornhole. Hello AZ, thank you for this video. It's been a pleasure. I posted the charts in the Discord. Cool, I'll have a look once we're done with this stream. Or I might just fall asleep and then I'll have a look when I wake up. Fluffy Cube. When I look at my charts, which indices or pairs do I look at first? NASDAQ or the US indices I look at first? NASDAQ is the one I look at first. I just like to put my notes on NASDAQ. I don't know why, I just do. So NASDAQ I look at first, and if there's anything interesting, I'll click on some higher time frames to look for anything interesting, and then I'll look at the correlating indices, and then I'll probably look at EU and GU, check out EG, have a look at gold, have a look at this one, the UK indice, and then VIX when the market opens, and DXY. So yeah, indices first, bit of Forex, and then just all over the place. Don't really have a process for that. The only process that's consistent is the things that I'm looking for, which is liquidity. Man City, US 30 has taken out equal lows. Are we still bearish or looking for a change in structure? Depends on your trading setup or what you're aiming for. But for me, what I'm looking for, but what I'm likely not to be trading, is a bullish reaction to these equal highs on the S&P. But who knows? And if we're looking for a bullish reaction, we'd want to place our trade on the strongest. So if we look very quickly, NASDAQ is the strongest. We have to keep in mind, it's a Monday, low range day, 12 o'clock is approaching, after 12, even less volatile, and then after the PM session it's just Asian session, and no one wants to trade in the Asian session. Not no one, but you know what I mean. Okay, I think we've caught up with all the questions. Only a few questions left actually. Thank you for your questions, MC. Actually, I'm just going to go through all of them because it's pretty close. You're very welcome, Man City. Shirobaka, been streaming 4 hours. Posture and hydration check. Yes, thank you, Shirobaka. You've spawned in, Crips. We're just about to end the stream, but thank you nonetheless for coming in. Dominic, yes, I trade for a living. Hello, Abdelziz. One thing, ICT mentorship YouTube on free, not paid. Yeah, he posted it on his YouTube, so yep, it's free. What year did I start? In 2019. Adrian, super good and informative stream. Big ups from the cold up north. It's hot down here. I've got the AC on and everything. Welcome, Marsh. Welcome back to the stream. I'm just about to end. Alright guys, I'm gonna say my final thank yous and then we'll end the stream. So if you joined the stream and you left a question or you didn't leave a question and you're just listening in, thank you all so much for the support. It means a lot, and you've kept my night very, what's the word? I've been very happy tonight to help answer all of your questions. So I appreciate your time for coming into here, because I know that you could have been spending your time doing other things, but you chose to spend it with me. So I'm very grateful for that. Alright guys, on that note, I will, if you have any other questions, I guess I'll be in the Discord. You can message me there, and in my own time, I'll get back to you guys. But until next time, I hope you have a great trading week full of discipline and following your rules and your plans. But take care, everyone. Peace.